virtually for, and they're going to be working back in an office, or some days in the office, some days not. Those kids are going to race back to the cities. And the reason is because they got a lot cheaper than they were a year ago or a year before that. So I think you're going to see a wave of demand with recent college grads. It's going to help apartments in cities like New York. But long term, there was a price correction, and it's going to take a longer period of time, maybe 5 years, to get it back to where it was.
Mitch Rochelle, is there going to be a refinancing of commercial real estate? Is it an easy process to restructure a given skyscraper, or is there going to be a value reduction in that skyscraper?
So I've been through enough cycles and seen enough bankruptcies. Yeah. If the revenue isn't there, meaning tenants aren't paying rent, and there's a need for restructuring, there will be. Who's ever at the bottom of the capital stack is the one who feels the pain, and it's likely going to happen if we see rents not being paid. We're seeing that in the retail sector. We're not necessarily seeing it in the office sector, because the office tenants, even though the space is vacant, still paying rent. So it would really have to be driven by office tenants being unable to pay their rent before we'd see it big time.
It's an unfair question, but what are the flavors of REITs here? Real estate investment trust is a broad category. How do they fare through all this? Is it opportunistic, or is this the time of their life where they're scared stiff?
If we could leave out the cannabis ones for a second, which are behaving differently from the others, I think what's the challenge with REITs is they're often bought by investors as a fixed income alternative. So they behave like bonds in some respects. But right now, they're all being thrown in the same basket and saying real estate bad. I do think that there are some opportunities in that space, especially in warehouses, certainly in retail. REITs not the place to be. And the office ones, some of the ones that are banged up pretty bad but have a great portfolio of tenants underlying it, there may be some buying opportunities there. But I'd look at the warehouse ones and the apartment ones, because I think that they've been oversold and their longer term fundamentals are there and the cash flow's there.
Great sound quality, Mitch, with his own radio microphone. Just fantastic. Love
Everybody
that, Mitch.
loves my
That's
microphone.
Fantastic.
Yeah,
when did you get that?
$135. I got it. I sent my son $135. It's the Blue Yeti. It's not blue, but it is called the Blue Yeti. Funny story though. I sent my son to Staples, my college-age son to Staples to go get it, and he called me from Staples because I told him to get the Blue Yeti, and he was looking for a cooler. So at least he knew what a Yeti was. He wasn't looking for the abominable snowman, but it's awesome. And every sound tech always compliments me on my sound. So I strive for perfection.
I understand there are other great shopping channels available.
Seriously,
on cable.
John
Mitch is
Farrow.
great to catch up. Mitch Rochelle, Macro Trends Advisors, founding partner. Thank you, sir. I'm in the market for a new rental. If anyone's out there and wants to help, I'm ready to go. I might move back into the old building, Tom. Maybe I'll do that. I'll move into the floor above you or something. Would you like that? Get the band back together.
Well, I mean, in the walk up there, we're like 7th floor, so John, you may want to go up higher than that.
Wait, John, did you take up tap dancing too?
Do I need to take up dancing?
Yeah,
That's a good idea.
Basically,
drumming.
Drumming.
Oh no,
drumming.
John is for everybody worldwide to understand. John is beloved within the Keen mass. I mean, the people just every day. Where's John? Is he coming back?
Donde las montañas juegan con la luz de la mañana. Quiero estar viajando al sol. Me atraviesa la mitad. No tengo miedo de lanzarme sin pensar. Si la velocidad me borra la memoria para olvidarme cómo era antes, cómo era.
Are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
From London and New York, this is Bloomberg Surveillance, and here is the price action. I'll keep it quick. The number you need to know, 95% efficacy rate in the final trial data coming from Pfizer. It gives this market a lift. Equity markets up 0.2% on the S&P 500. Bit of outperformance on the small caps. Lisa's been talking about this through the week. Let's talk about it again. In the bond market, where are you not getting a move? Treasuries. Yields aren't higher, they're lower. This curve is flatter. We're down a basis point on a 30-year. We are unchanged on 10s and just a little lift on 2s. The curve is doing that and has done that over the last week or so. I want to finish in the FX market and foreign exchange. This is really, really interesting. Dollar weaker, euro stronger. We keep asking about the tolerance of central banks. Euro dollar 118.58. We're thinking about the line of the sand 120. The currency market's about the push and pull of more than two currencies. You've got to throw in China in there. Euro-China has had a 5-6% move since the end of July in the Chinese currency's favour. Now, Kit Jukes of SocGen has made a really good point, Tom, that takes a little bit of pressure off the ECB to respond to euro-dollar at 120 because more broadly, the Chinese currency is the pressure valve for this FX market. That's the shock absorber for that dollar weakness, and that's important. Don't just look at euro-dollar, look elsewhere as well.
Now, dollar renminbi right now 6.56. Again, another day of new strength in the yuan as well. Right now, it's good to speak to Dean Kernan of Macro Risk Advisors. We do that because, boy, has he been right. With the VIX at 41 and down we come with better stock markets. But Kernan pointing out the election uncertainty, and that would clear. And we see that at 21.98 right now on the VIX. Dean, have we cleared all of the election uncertainty?
Well, for the most part, I think you still got that Jan 5th date. And if you stare at the S&P option prices by expiration, you can actually see something pretty granular. You can look at December 31st as an expiry, so right at the end of the year, and that's typically a very quiet week, right, between Christmas and New Year's. So that implied volatility is pretty low, but you can go out to January 8th and you see there's actually a bump up. So that date between those two expirations, January 5th, that Georgia runoff date, actually does have some consequence, at least in terms of how vol markets are pricing.
So, Dean, can we just zoom out a little bit? We've been talking about full bull, as John highlighted, from the Bank of America survey that came out yesterday. We're hearing about how people are expecting some sort of disturbances over the next couple of weeks and months as people calibrate themselves and their outlooks to the near-term reality of a pandemic that's worsening. What do you foresee, based on the bullish trends in the markets that you track, the technical factors, how much of a pullback could we get?
Well, it's anyone's guess. I think, really it comes down to the response from the government. I think the thing we have to worry about is whether the Congress pulls off a stimulus or not. I think that's really, the weak spot for the market is the politics of it.
Dean Kernert with us right now. Jennifer, I do want to point out housing statistics out, and they are the halves of the economy, certainly repositioning in housing. Let me get that up right now with a constructive revision as well on housing. I'm not going to give you too much of the data other than to say month over month, it's a very strong beat on housing starts. And critically, the previous month was a huge revision upward as well. Not so much moving the bond market, John, but again, that two-part America, an America struggling and also a booming housing economy.
It's a really good upside surprise, 4.9% month on month, the median estimate 3.2. The revision, Tom, you talk of a revision. The previous month, 1.9%. The upward revision, 6.3. That's housing starts. And this has been a really, really solid part of this economy, Dean. The housing sector has just done terrifically well. Low rates, people are spending on their houses. Home Depot to the moon. That's been a really great story for 2020. Dean, the small caps. Let's talk about the story that hasn't worked and is starting to work. The cyclical parts of this market, the small caps. Can you walk me through the trend there and whether that is durable? That's been the big debate over the last week, how durable some of these catch-up moves have been.
I think that's obviously on people's minds, and certainly a question that we fielded, quite frequently last week was just this epic move in the factor rotations, right? People are calling it a 15 standard deviation move from growth to value, and people are asking, is that just an indication of how crowded the space, has been in terms of positioning and things like growth and the underpositioning in value? I think there's something to that. I think the other part is, look, we've got pricing in the market that reflects a truly unusual and unprecedented consequence. We sort of knew when this vaccine announcement ultimately came, we were going to have this, this big rotation. I think, the question around value and just the sort of more old economy type of stocks, I think is an important one. Look, I think we have a permanently changed economy in a lot of ways, but we are slowly coming back. And when I step back and I just look at the broad picture of risk, I see option prices that, as Tom was saying, we were expecting normalization post the election, but I still see them as something you can utilize in your portfolio and more on the short side than on the long side. So these option premiums are sort of the last war for the Fed to push lower. They crushed FX vol, they crushed rate vol. That was a major part of how they had to restore market functioning back in the March lows. But you still have very high option prices as we start 2021, and I just think you can use them as an income-generating part of your portfolio.
Well, Dean, I want to pick up on that word you used, normal. Pre-pandemic, there was nothing really normal about the low volatility regime we were in for so many years, with the VIX down towards 10. Right now, 21, south of 22, just. Dean, what is normal? And what do you think is the normal that we need to get used to?
I'm thinking a lot about the post-crisis period, the GFC. And, we had the aftershocks of the flash crash in 2010. Then we had the Eurozone crisis 2011 into 2012. And then we had this long, long period where the economy was clearly normalizing, but behind the push towards trying to, get the labor market back on its feet, Fed policy stayed in town much longer than you would have thought. And that normalization in the VIX from, call it 2012 to 2015, 2016, you had an average VIX of about 15 for that period. And I think that's just my playbook, is that you have a crisis, you have an asset price shock, you have a massive policy response each time it gets bigger and bigger. And then even as people argue, well, maybe we don't need as much Fed, of the Fed guardrails as we had during the crisis, the guardrails stay up. And ultimately, those guardrails, they work a little bit on the real economy, but really what they impact is asset prices. And I think they've impacted FX vol. They've taken interest rate volatility to the lows. And it's just this equity volatility that I think still stands out as something that's, it's got some normalization into 2021.
Dean, I've been struck by the recent volatility and how it upended a lot of quant funds in particular that have posted some pretty stark returns based on the fact that you cannot plan for a vaccine, you cannot plan for some sort of fiscal bill that is or isn't passed, and you can't necessarily plan for a Fed response based on that news. Has the old model just been completely upended?
I think you could make that argument that the notion of the carry trade is a very difficult one to keep pursuing in the sense that we know there's risk premium in markets. There are these sources of return that some of the quant funds and some of the more volatility-oriented strategies have targeted. But when you get these very unusual factors, this year being so unusual, it just makes the Sharpe ratio of a lot of these strategies compromised and all else equal less attractive.
Very quickly, images from Berlin of water cannons. I mean, this started out peaceful with Francine Lacroix earlier this morning, and with that image there, you don't see it. On Bloomberg Radio right now, it's just crowds assembled in autumnal Berlin, and moments ago there was substantial use of water cannons. We don't see that right now, but there it is. I'm going to call it a more distressing situation. Dean Kernet, your world seems so removed from pandemic agony. Are you surprised by that?
I think that, this is a very, I think 2021 is going to be challenging in the sense that the social aspects of, this pandemic are unrelenting and they're so significant. The policy response in some ways creates additional dislocations in terms of, the haves and have-nots. So it's going to be very tricky, especially as we transition to a new administration and one that wants to re-embrace globalism. There's a lot of those uncertainties, out there. I think geopolitics have been typically more bark than bite, but we always have to just keep an eye on the types of things that markets tend to forget over time. We cross different things off our worry list, but oftentimes there's just things that we can't predict. So, even as we say, use volatility, use options on the short side to try to generate some premium in 2021, we have to be on guard for the types of things that can go wrong. And then what do we learn? We learn that over time, especially during the good times, we underestimate the jump to illiquid conditions, right? The speed with which markets can turn very illiquid very quickly. I think that's a key lesson from 2020 and something that as we talk to, our clients at the back end of an incredible year in so many ways, it's just to be prepared, for the unexpected.
A record high in the stock market in February, a month before we locked things down in America, and a record high in the stock market as things are locking down again. Not in the same way, but it's similar. Dean, great to catch up, sir. As always, Dean Kernet, Macro Risk Advisor, CEO. Tom, there's always something to worry about. There's always a downside risk. There's always tons of downside risk. Just right now, there's a lot to worry about in the near term into year end.
And I do think the media change is different. I mean, I was weaned in 74, 75, John, and it was a horrific manufacturing slowdown into a good equity market. And just real simply, back then we didn't have the media onslaught we have now, the social media onslaught as well. Futures up 5, they pull back a little bit here. Right now, on temperature, because the physics, the thermodynamics of all this vaccine talk is about temperature, keeping vaccines safe for transport, making them efficacious up to the point of an injection. Franz Werner Haas joins us right now with CureVac of Germany to talk of this temperature. Franz Werner, how do you react to one vaccine at an unimaginable 90 degrees Fahrenheit and another one being refrigerated? How does that occur?
Well, it depends most probably on how you're working with the mRNA, how you're stabilizing the RNA, and how you're manufacturing the RNA. This is more or less the only points where it really could make a difference. And as we are holding on the RNA for all our vaccines, we have got a rabies vaccine, which is already in the clinics for a while. That we have seen that the property is that you can have RNA pretty stable. And then certainly on the product by product or target by target, you have to reevaluate again. And with the COVID-19 vaccine candidate we have got in the clinic, we see the 3 month.
Well, you see it within 3 months, but the mystery, I think, to all of our viewers and listeners is almost back to the 1950s, and I remember the liquid nitrogen in doctors' offices as well. Is that what we're heading back to, is we're going to have those metal containers with the smoke coming out of them when I was a kid?
No, I don't think so. As we have got a stability of the COVID-19 vaccine candidate already at 3 months, and this is up to 3 months minimum. So it will be extended because all what we do is real time. And you have to see that now the RNA vaccines, not only in our hands, but also in the hands of the others, this is brand new. We can make a difference. And then certainly the development of the stability will increase as well and will get better and better over time. This is what we see. And, you know, this is really something we have to work on, and we will.
So given the fact that you're on the front lines of this, actually manufacturing potential vaccines, can you give us a sense of your timeline of how quickly you think that manufacturing could get ramped up and distribution channels could get solidified so that we get a critical mass of people immunized against the virus?
Well, you know, we are mRNA manufacturers, not only developers on the one side for the molecule, but to have it as products, but also manufacturing, because this is what you need since 2006. And it is certainly the scale up you always do according to what you have got in the pipeline. What is the need you really to have the capacity for? When we started 2 years ago with our fourth product line, which is an industrial scale, nobody really was believing in that you need this big scale. Certainly nobody knew at the time that we are talking about COVID-19. But since the beginning of this year, all this capacity which is going to be built up, and as we are actually building this up, not only we at CureVac, also others, this is mRNA capacity which stays even beyond COVID-19. It will be a part of the preparedness thought, because there will be other viruses coming, and RNA can make a difference, obviously, and for that the capacity is there. But you can't get from 0 to 100 within a minute. But all what is at the moment what we see as scaled up worldwide, globally, beyond CureVac even, there will be enough capacity to really vaccinate the world. Well, let's say until the end of next year.
So, Franz Werner, when you talk about mRNA and the potential differences between the vaccines, Tom Keen's ears light up, or his eyes light up and his ears perk up as he tries to imagine the sequencing here. Most people's eyes glaze over. They don't know the difference from one vaccine to another. People talk about how it's important to have multiple vaccines, but does it complicate the issue? I mean, who gets what, and why is that important?
Well, we will see, as this is what we are doing is all in real time. If you compare it with other vaccine developing strategy in the past, so whatever was the real world in the past, this really has been accelerated without doing any concession to the safety and tolerability of the vaccine. But you have to see it target by target, and this is COVID-19, and what it does to the immune system, how long the protection will be. This is all to be seen. At the moment, there are, head runners on not only mRNA, but also on protein-based and viral vector-based technologies. And we will have to see how long is really the protection level, the memory effect, and what does it do to the different immune systems of, people with indications, respiratory indications, elderly people. And this is all what we will find out. What we see is that most probably most of the vaccines have different properties, and then certainly for the different needs. And therefore, it is good to have more than just one vaccine in order to see this later, what is most appropriate for which kind of target population.
Sir, thank you so much for joining us today. Franz Werner Haas with CureVac of Germany. Greatly appreciate that. this morning. Right now, on the conversation of these vaccines, it is about big pharmaceutical at the end of the day, and that can be GlaxoSmithKline as well. Here, Emma Walmsley.
We have 3 vaccines partnered in the clinic with others, including Sanofi, because that adjuvant technology is proven in pandemic to work on older people and is a more effective way to get to scale manufacturing, which is the other real challenge here. We need to probably provide up to 14 billion doses if we're in 2-dose vaccines to really protect the world.
And Dame Walmsley there this morning. Right now, David Rubenstein with us, of course, peer-to-peer conversations, and he will drive this conversation forward today. David, what did you learn?
Well, despite the fact that they haven't been as many headlines as, say, Pfizer or Moderna of late, the largest manufacturer of vaccines in the world is actually GlaxoSmithKline or GSK. And it's the only pharmaceutical company of any size in the world that's led by a woman, Emma Walmsley, who's a British woman. She ran the consumer healthcare business for a long time of L'Oreal, then was recruited to run the consumer healthcare business of GSK. Ultimately, they're kind of hiving that off, and she's now running the pharmaceutical business. They produce roughly 200 million doses of vaccines a day. They have more than 30 vaccines that they produce around the world, and 40% of the children in the world get their vaccines from GSK. So it's a very impressive company, though it hasn't gotten as much attention lately as some of the other ones that have been in the news.
Well, I totally agree with you on that, and I'm in that camp where I think it's going to be the other people maybe that get the attention at some point. From your conversation with her, and frankly with all your contacts, is this going to be a messenger RNA, mRNA, modern science solution, or will the more traditional vaccines be part of the pandemic solution?
I think it's going to be the messenger RNA and the more typical, the synthetic ones. And the reason is that normally with a vaccine, it takes a long time to grow a vaccine and to get the virus to grow. We don't have that much time. Normally, a vaccine takes 7 years or so to develop. The shortest ever has been 4 years. And to develop them, it takes a long time to grow the the bacteria that you put into the vaccine. They're typically live germs. Like the polio vaccine has had live germs in it that are from the from polio. That is a much more complicated process, and we don't have the time for it. So the techniques that GSK is using with their partner Sanofi is something called adjuvant DNA, and it's a synthetic type of process. So I think it's the synthetics ones that are going to be the ones that people are going to be using. And the real problem is not so much that we're going to get a vaccine that works. I think we'll get vaccines that work. The problem is distributing them. It's not that easy, as you pointed out earlier in your conversation. You have to refrigerate these, and typically they take booster shots. So you have to have 2 shots. And therefore, you need, if you got 7.5 billion people on the face of the earth, you need 15 billion of these things. That's a lot of time, a lot of vaccines. Also, how are you going to distribute them to the emerging markets? How do you distribute in the United States? For example, who's going to get it first? Is it going to be the business people, the private equity people? Obviously not. It's going to be healthcare workers, people who have health problems. So it's going to be a long time before the average person gets some of these vaccines. I think we're looking at this until the 3rd and 4th quarter of next year before everybody who wants a vaccine gets one.
All right. Well, I like to look at the gloom and doom, but I want to switch gears and be optimistic right now because we all need 2020 to be over. As an investor, as well as an interviewer of people like Emma Walmsley, I'm wondering whether your sense is that all of the money that's been pumped into the biopharmaceutical sector because of COVID-19, has it jump-started a renaissance of sorts in the biotechnology world?
Oh, absolutely. I think we haven't seen anything like this since the space effort or since the Manhattan Project, and probably the Manhattan Project was dwarfed by what we have been doing now. We're putting out staggering sums of money, and I think it will produce a revolution in biotech, and I think it'll be really good for our healthcare system. But in the immediate future, people are focused on getting these vaccines, and one of the challenges we have is a lot of people are afraid of taking them. They think it's been politicized. They're not sure it's safe. And a lot of people just don't traditionally like vaccines. So we got to make sure everybody gets this, or virtually everybody gets it, if it's really going to have an effect.
Well, based on your experience as an investor, given the fact that there is this concern about distribution, about people taking it, about how long this could get rolled out, and we could actually end the pandemic, how much do you factor in the here and now, the pain that we're seeing with the cases escalating, to your longer-term investing horizons and outlooks?
Well, we've been going through a biotech revolution since DNA was really discovered in the 1950s, but it's really taken off, I would say, in the last 10 years. In the last 2 or 3 years, you're seeing enormous advances in this area, and investors of all types are putting more money in this as a percentage than anything they've ever done before. So I think it's an incredible opportunity. Look at Moderna, as a relatively new company, has never actually had anything approved by the FDA yet, and now it has a market cap of about $35 billion. People want to put money in these things on the hope that it will actually produce vaccines and other products that work, and I think people feel they will.
David, thank you so much. David Rubenstein with us, peer-to-peer, and a busy, busy Wednesday for Mr. Rubenstein. And, of course, GSK CEO Emma Walmsley, Dame Walmsley, peer-to-peer conversation, 9 p.m. tonight. Lisa, it is an extraordinary day, just the breaking news flow coming in along with all this. And I'm going to go back, Lisa, to the arch issue, which is aid for the non-fancy people. And it's a real mystery where that is.
Yeah, especially given the fact that you have a number of these pandemic-related relief programs that are expiring in the next few months. To me, this is critical because we talk about the savings rate, the savings glut, but that is not evenly distributed. The people on the lower income brackets are running out of cash. And it's going to get worse because, frankly, you can't keep a restaurant open if people don't want to sit outside in 30-degree weather eating. And this is a real conundrum as we head into the winter months.
We're already seeing that, and folks, today really maybe one or the second coldest day so far this year in New York. And of course, we're experiencing that, as I'm sure many of you are, in radio and TV as well. Lisa, the other thing I see here is the economic data. Housing starts, well, they were actually pretty good, but it's going to be, again, fascinating to get to the first week of December and that critical jobs report.
Yeah, especially given the fact that retail sales yesterday came in as a disappointment. Okay, look, housing has been the standout among all of the economic data. It has continued to absolutely go gangbusters as people move out of cities, move into bigger homes, and there just isn't the supply there. But if you look at the U.S. Citigroup Surprise Index, it has actually fallen to the lowest since June. Basically, people are highballing the economy more often than lowballing the economy relative to where they were a couple of weeks ago. To me, this is interesting. It highlights how quickly moving this economy is, how hard it is to pin down by economists.
Yeah, I'm really glad you bring that up because it is the partition of the economy. Neil Dutta at Masco Risk Perspectives brought that up yesterday, where we see rents in so many of the cities and even in the suburbs ebbing away here, even with home ownership clearly among the elites, rather, as Mitch Rochelle talked about. Let me set up the day for you as well. The Bloomberg New Economy Forum, ongoing with a lot of international perspective today. Gita Gopinath of the International Monetary Fund, no doubt with important comments there as well. Coming up later, the South African president will join at 10 a.m. As part of this discussion. That'll be a timely discussion. ZAR is one of those currencies where people are looking at finally appreciation within the emerging space. Not like the Pacific Rim, but nevertheless, it's there. I should point out gold, as we speak of South Africa, $18.74 the ounce, down $11. Futures ebb away ever so slightly, up 8. Dow futures up 123, the VIX 21.97. Stay with us on Bloomberg Radio and on Bloomberg Television. Good morning.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes away from the opening hour with futures advancing 0.2%. We begin with a big issue. Restrictions piling up, infections surging across the United States. Pennsylvania putting restrictions on travelers. Ohio implementing a curfew and joining Iowa. West Virginia, Utah and North Dakota issuing new mask mandates. This as Illinois announces new curbs affecting gyms, hotels, restaurants, retailers and more. The White House, the COVID task force, reportedly issuing a warning to the administration, saying efforts to stop the spread were, quote, inadequate and must be increased to flatten the curve, putting more pressure on officials to deliver stimulus. Democratic leaders sending a letter across the aisle proposing a return to the negotiating table, writing the following: millions of unemployed Americans and those facing eviction and hunger demand action from their leaders. The time to act is upon us like never before. But the two sides are remaining far apart, with Senate Majority Leader Mitch McConnell still focusing on a more targeted bill.
My Republican colleagues and I have stated over and over that we still want to pass more coronavirus relief for the American people. Senate Republicans have voted multiple times to send hundreds of billions of dollars to schools, small businesses, health care, and laid-off workers. If Speaker Pelosi and Leader Schumer had not made the calculation of block it, that money could have been out the door many weeks ago.
The standoff continues. Let's bring in the Bloomberg team, Kayleigh Lyons and Sarah Ponczek for more. Kayleigh, the COVID numbers, not great. The advancements on the vaccine front, it improves once again.
Yeah, a little bit of positive news on the vaccine this morning. John, Pfizer and its partner BioNTech releasing the final results of its analysis from its clinical trial for its COVID vaccine. 95% efficacy rate, John, even higher than the 90% released in its preliminary results. Both of those stocks poised to open higher this morning. Pfizer up 2.5%, BioNTech by more than 5%. Now, of the 44,000 participants in the trial, only 170 actually tested positive for COVID. The company saying the vaccine protects people across all ages, including the vulnerable group of 65 and older. It also helped prevent severe cases and had no significant safety problems. So this paves the way for the companies to seek emergency use authorization from the FDA and means this thing could launch by the end of the year. But John, we have to keep in mind this thing still needs to be scaled and distributed. It's not clear yet how quickly it will make a difference in the trajectory of the pandemic because, as we know, the numbers continue to get worse. The U.S. crossing 11.3 million COVID cases as of yesterday. Even Senator Chuck Grassley, who's in line for the succession to the presidency, tested positive just yesterday. And as a result, the restrictions, as you said, continue to come. Illinois governor starting to crack down. In L.A. County, they're imposing new restrictions and warning they could go back to stay-at-home orders because daily infections in that area have more than doubled just since the start of November. It's a solemn reminder, John, that yes, a vaccine may be coming, but in the near term, things are still looking grim.
Kelly, thank you. And as Kelly points out, more restrictions and a warning there could be more to come. And Sarah, when you look at the price action in this market, I've got to say this morning, muted as you might expect, but in the bond market, nothing. Tumbleweed for the last couple of days.
It really is tumbleweed. It's just quiet. And equity markets might be quiet today, John, but it's remarkable how quiet the bond market has really been all week long. Granted, it's just Wednesday, but Monday, Tuesday, Wednesday, nothing. As you said, even with a lot to take in, COVID and virus news, as Kayleigh just walked us through. Also, plenty of corporate news, too. Boeing, Apple, the list goes on. But here, if you look at the FX and rates market, let's start with the 10-year yields at 85 basis points. Sure, we are setting a higher range than pre-election, you could say, but a far cry from when we were testing 1% just last week. Also, the Bloomberg Dollar Spot Index, very, very slightly lower. Still, though, this would be a fourth day lower, also a fresh low, the lowest since 2018. Crude higher for a third day. We do see a bit of a larger gain here, on pace for a third straight week of gains. One area, though, it's certainly not quiet, that we just saw on our screens, Bitcoin above 18,000 for the first time since 2017. I have to point it out. Last month, we were sub 11,000. So the momentum here is just unbelievable. It keeps on going. But if we take a look at the equity market, also very quiet this morning. A global rally, sure, S&P futures pointing higher. The Nasdaq relatively flat. Yeah. We also see higher in Europe and Asia. But something I do want to point out, and if we go across the sea, is that in Asia, if you look at the MSCI Asia Pacific Index, higher for a 13th straight day. That's the longest winning streak since 1988. Yes, over 30 years. But we haven't seen the enthusiasm there that we have seen here in the U.S. or in Europe, because even with that streak, they're still lagging behind the U.S. and Europe over that same time period.
Sarah, thank you. With the Bitcoin mention as well, and I've had so many people write in the last 24 hours asking for a Bitcoin mention. There it is. There it was. That's it. Bitcoin. You've got it. Sarah did it. She might do it again a little bit later in the hour. Here's the story for me. The bond market last week, Pfizer came out with that great news. Bond market, lower, treasuries lower, yields higher, curve steeper. That Monday morning, we opened up 2s, 10s, 67 basis points. Since then, we've gone up and we've rolled over this morning. 67 basis points again, full round trip on the yield curve. We'll get into the why in just a moment, but for that cyclical trade, to support that rotation into the financials, do you need the bond market to play ball? That's going to be a key topic for us through the next hour. George Bory of Wells Fargo looking to take advantage of this strengthening economy. He writes the following: our overall fixed income strategy is focused on positioning for recovery, a steeper yield, tighter credit spreads, rising stars in corporate credit, and continuing to look for diversified sources of income and avoiding liquidity traps and zombie companies. George Bory joins us now. George, can we start right there on the yield curve, the difference between 2s and 10s, that spread? What's gone on in the last week?
Yeah, good morning, John. Thanks for having me on the show. It's great to be on, as always. Yeah, you know, as you mentioned, the curve did steepen a fair bit last week on the back of the vaccine news. And I think on the assumption that, you know, sort of the big overhang that the COVID outbreak has really dominated the market all year, without a doubt, all markets. And so there's sort of hope, if you will, that will start to abate sometime next year. You take that plus very easy monetary policy, plus the hopes and expectations that we're going to see a little bit more fiscal support either by the end of this year or in early next year, kind of takes the relief trade, if you will, out of the treasury market. And so all of that demand for very safe, secure bonds out at the long end has started to abate, and I would say abate somewhat. So we saw a sharp steepening, but then, as you mentioned, you know, the slow and steady drip of information that's been pretty dismal, to be perfectly you know, kind of honest about it, is that, you know, the COVID statistics are pretty sobering. And so it's a little bit difficult for bond investors to rush out and just simply kind of throw caution to the wind, if you will, and kind of dump all your treasury bonds because you think yields are going to go straight line up. The reality is it's going to take some time for the bond market to readjust. We still have some very meaningful headwinds. The data is getting worse, not better. The statistics from COVID are getting worse, not better. And while there's hopes for a vaccine, the reality is that vaccine probably doesn't come to the fore until probably the second quarter of next year.
So, George, your call is, though, that trade will develop over time as we work our way into 2021. You've done a really good job of just separating the phases that we've traded through 2020 into year end. What's significant about the phase we're in right now, George?
Yeah, when we think about the bond market, so the bond market's has had a very interesting year, dominated by three very kind of distinct periods. The beginning of the year, the first quarter of this year, was when the COVID outbreak really, you know, sort of hit the market, and bond yields collapsed. You know, bond yields came down dramatically, but risk premiums went up as well. So being in treasuries, being in safe, secure bonds, kind of were the best performing assets. But that really did push up kind of total returns for bond investors. The second half of the year, the second and third quarter, were really dominated by a compression of risk premiums. So the Fed's involvement in the market helped kind of push down those risk premiums, and again boosted returns. You had a nice compression, if you will, in the world of fixed income. And then it's really been in the fourth quarter where bond yields have just really started to kind of creep up and curves have started to steepen, but it's still relatively modest. We're talking, 20 basis points or so, something of that order, relative to the well over 100 basis points of drop in yields that we saw earlier this year. So as we kind of finish the year, there is a longer term trend here. The yields do seem to have troughed, and they do look like they are going to continue to creep higher as we go into next year. But from a bond investor's perspective, it's been a good year. Bond returns are up, call it 6, 7, in some instances 8%. Protecting those returns, protecting your capital going into year end is a big part of how bond investors are thinking about the market today. You mentioned tumbleweeds at the beginning of the show. Some of those tumbleweeds are kind of rolling through our markets as bond investors don't make dramatic moves. They're looking to position for next year. They're not willing to kind of give up on some of that safety and caution, and they're still looking for the yield. As you mentioned, bond yields are at 85 basis points. We're right in the middle of what the range is likely to be, but those yields are still very, very low. And by most accounts, when you look across the yield curve, we still have negative real yields in treasuries. So there is a need for incremental income. There is a need to kind of protect your portfolio, and there is a need to kind of buffer against that marginal kind of increase, if you will, of yields over a longer period of time.
George, great to catch up, to get your thoughts on this market as always. George Bory there of Wells Fargo. Let's check in on the equity market. 20 minutes out from the opening bell. This is the shape of things in equity futures. Incrementally, a bit more good news coming from Pfizer this morning. Gives the equity market a little bit of a lift. The S&P 500 futures advance up 0.2%. Nasdaq underperforms. Small caps outperform. Got a flavour of this in the last week. It continues this morning. Let's get you some movers at the market desk. Here's Abigail Doolittle.
John, let's start out with Pfizer because that is certainly helping the S&P 500 incrementally outperform the Nasdaq. As you were just mentioning, Pfizer is popping, of course, on the news that Pfizer and its partner BioNTech have planned an emergency filing for their vaccine now that they're saying that it is 95% effective for all ages and ethnicities with no significant problems, and that is on a trial of nearly 44,000 people. So good news there, and you see those shares popping. Boeing up sharply, up 7.5% on the news that the FAA has lifted the long U.S. grounding on extensive fixes, new training. And what's really amazing here, John, is into today, over the last 7 trading days, up 33%. So I'm guessing this is not entirely a surprise to some folks buying before this good news. Tesla up for another day after being the news of being included in the S&P 500, which will happen on December 31st. And then as for that Nasdaq outperformance, Apple, of course, is the biggest weighting, or one of the top 2 biggest weightings to the Nasdaq, down about 0.5% on the news that they're cutting their fees in half to 15% from 30%. That's a big piece of the App Store revenue, which was last year roughly $54 billion. So the stock is off modestly, John.
We edge back just a little bit. Abigail, thank you. We'll touch base with you a little bit later. Coming up on this program, Fed Chair Jay Powell warning of significant downside risk to the recovery as the pandemic surges across the United States. That conversation up next with BlackRock's Jim Keenan. As we count you down to the opening bell, 18 minutes away in New York City this morning. Good morning. Equity futures advanced just a little bit. A call from Credit Suisse targeting 40.50 on the S&P 500 year-end 2021. We'll try and get into that a little bit later. From London and New York, this is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
With the virus now spreading at a fast rate, the next few months may be very challenging. We're not going back to the same economy. We're going back to a different economy.
We're going back to a different economy. The words of Fed Chair Jay Powell expecting the recovery to continue at a solid pace, but warning that it risks losing momentum with the pandemic surging across the country. Meanwhile, ECB President Christine Lagarde echoing the Fed's concerns, warning vaccine developments aren't changing their forecasts.
It might be a little bit accelerated, given the news that we're receiving from the various horizons, Germany, US, but I don't think that is going to be a game changer.
Joining us now, Bloomberg's international economics and policy correspondent, Michael McKee. I understand the hesitancy, Mike, to say this is a game changer for our forecasts. Unthinkable that it wouldn't change the forecast for central bank for 21 and beyond, though.
For 21 and beyond. The question, John, is what happens in the meantime. I mean, Powell and Lagarde acknowledging the hard part is going to be getting everybody vaccinated, and analysts are all saying it's going to be a game changer sometime next year. But in the meantime, the economies in both continents are slowing down as more and more businesses close up because of the COVID outbreak that's going on right now. The dilemma for them is they know they can't do a whole lot, but they feel like they have to do something. Interest rates are really, really low, and here in the United States, mortgage rates are at record lows and housing is booming. You look at housing starts today, up 6.4% for the month of October. Single-family homes up 6.4%. Housing starts overall 4.9%. We're really seeing some activity there. And the long end rates have crept up a little bit. So if the Fed's going to do anything, it might be to move out on the curve and buy at the longer end, just hold them down a little bit more. For the ECB rates already so low that going negative further is probably not going to help. They already have to exempt bank deposits from some of that because rates are so low. They can do more QE, but spreads are already near record lows, so do they really need it? Here's something that they can do that the Fed doesn't do. Targeted long-term refinancing operations, or TLTROs. Banks can borrow at a low negative rate and lend into the economy at a higher negative rate. They make money on the spread. You can see the impact it's had on borrowing in Europe. Look for the ECB to add to it. Christine Lagarde has said that's going to be one of their tools. But, of course, people will only borrow if they think there's going to be a payoff, and that's what we're watching in terms of how long it's going to take to get the vaccine out there. Banks in the U.S. and Europe already tightening lending standards, so we're going to have a period in which the economy is slow and central banks may not be able to help a lot with fiscal authorities on the sideline. Could be rough.
That was the risk in spring, that banks started to behave pro-cyclically. Starting to see that a little bit going into year-end in Europe. Mike, great work as always. BlackRock's Jim Keenan weighing in on the near-term headwinds versus the long-term tailwinds, writing the following. I expect further dispersion in the market and strong investor interest in credit, particularly private markets, as policy and market sentiment continue to evolve from defending against the possible downturn to positioning for longer-term growth. Jim joins us now for more. Jim, let's start with the policy story first, then we can get to credit and private credit second. The policy story, your base case now for the Fed, for the ECB, a little bit more from the latter, done with the former?
Yeah, I think and the short answer is I think the central banks are going to remain accommodative. I would say, the election outcome and the uncertainty going into the January runoff in the Senate race in Georgia probably puts a little bit more pressure on the central bank policy to remain very accommodative as fiscal policy in the short term becomes in question. But that being said, I think the vaccine was incredibly important news. It's tremendous news, and it gives a kind of a time horizon. And I think you'll continue to see both the central banks as well as fiscal governors be very willing to kind of bridge that recovery, even though the shorter term data may look a little bit more negative as you see some of the virus spiking, but long term very accommodative.
It keeps coming back to this, Jim. Forward outlook brighter, near term outlook much, much darker. My question to you, Jim, as you look at the credit market right now, Where would you look for signs of excess optimism about what the future holds? And do you see anything that would suggest that right now?
It's funny. I mean, if you went back 2 weeks ago before the election, it almost there was a lot of pessimism. There was a lot of uncertainty around the outcomes of the election. There was uncertainty with regards to the spike of the virus, and it was before the vaccine news. Very quickly, in a matter of 2 weeks, you've seen a significant race up in risk assets as people have positioned for that pro-cyclical growth. I don't see excesses. I see a tight market. But I think that's supported by both the earnings growth, the policy that we just talked about, and really a multi-year recovery from an economic picture. And so spreads, I think, are generally supportive. They're going to produce a lower rate of return. But that being said, in this environment that is more pro-cyclical, I think rates on the front end stay very low and are locked in. You might see some volatility on the long end, just as you start to see inflation expectations. But in general, I think longer-term low growth and the headwinds to that because of debt will remain low. So spread product is supported by that earnings profile and the accommodative policy. And I think that also produces a very strong backdrop for equities. And again, where earnings risk premiums or multiples are right now, probably a lower return, but still positive as you start to see the environment start to shift to more of a growth environment. And I think that's supportive for spreads as well as equities.
Jim, I try and be a simple man, and I often just talk about the headline number, high-yield spreads. How much dispersion are you actually seeing still beneath the surface?
So I would say that the majority of the market has really recovered. I think going into 2020, most of the public credit markets were actually fairly conservative, and you can isolate out some of the commodity sectors and energy, or some of the sectors that had really kind of secular headwinds associated to that. But remember, coming into 2020, we were in a lower growth environment, and so most of the balance sheets were in pretty decent position. Obviously, the breadth of the downturn in Q2 and Q3 of this year and the duration for some of these sectors of negative earnings is going to be substantial. So you have these certain sectors that had levered balance sheets coming in that are ultimately going to need to restructure in some fashion or form, but still may be viable and good businesses with new balance sheets. But most of the market has recovered back up to 80 to 90% of the spreads of where they were pre-COVID. And that being said, with rates lower, the all-in yields are lower.
Well, that's where I wanted to finish. You've been talking a lot about the opportunities in private credit, direct lending, distressed debt opportunities. Is there any distress right now to take advantage of, Jim?
Yeah, it's always a bit of distress, and I do think that there's a variety of good companies in some of these sectors that were not set up for 2020 or 21 to have the significance or the duration of the downturn. And so I do think maybe 6 months ago they were priced as if they were going to restructure or liquidate. I think now some of these needs to rationalize their balance sheet where they can't put more debt on debt. So they'll look to equitize some of that balance sheet or bring in new equity. So there are opportunities out there. It's not necessarily the breadth that you saw 2 or 3 months ago, but there's certainly opportunities. And the reality is, as we just talked about, when you look at where assets are being priced and globally speaking, the need for yield or the need for income or return, you really have to look at pockets to find that. And I think, the private credit markets, performing assets, are opportunities to get high single digits type income. And that's an opportunity that we think a lot of our clients are going to be assessing and looking into. And then, the equity markets are where people are going to really seek out returns just based off of earnings growth. And as you talked about before, the dispersion, right? We're seeing this balance between the different economic shifts based off of behavioral changes and policy shifts because of the virus.
Two different worlds right now, the future and the present. Jim, great to catch up, as always. So my best to the team. Jim Keenan there of BlackRock. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls. Then later, full bull or room to run? The great debate right now. Investors taking their positions. We'll ask the question to JP Morgan's Jack Caffrey very shortly.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Here are the morning calls. Baird upgrading Boeing to outperform. The analysts expecting vaccine developments and the return of the 737 MAX to accelerate the company's recovery. Jefferies downgrading Honeywell to a hold. The analysts citing a lack of near-term catalysts. And finally, Morgan Stanley upgrading Tesla to overweight. Analyst Adam Jonas predicting a profound shift to generating high-margin software and services revenue. There are three of the calls. Up next on this program, rising COVID infections meets improving vaccine developments. That conversation up next with JP Morgan's Jack Caffrey. From London and New York, this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there's a Google problem in this country.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
It's a tug of war. That's the description of the trading action, the price action of the last couple of weeks, a tug of war between a brighter forward outlook and a darker near-term outlook. And that tug of war is captured by this equity market. The Nasdaq yesterday outperforming, relatively speaking. This morning underperforming. Nasdaq futures down a tenth. Russell futures up a third of 1%. The S&P somewhere in between, up about a tenth of 1%. There's the opening bout. Switch up the board in the bond market. This has been a story for me and many others as well. In the 10-year part of the Treasury curve, yield 0.8586%, unchanged on the day. But 2s, 10s are basically where they were at the open last Monday. Even with the improvements around the vaccine story, this yield curve is struggling to steepen out. That's the story in bonds. In commodities, we do advance. $42 is just about in sight on WTI. And in foreign exchange, euro-dollar unchanged at 118.65. That's the cross-asset story at the open this Wednesday morning. Let's get to the market desk and say hey to Abigail.
Hey there, John. Well, let's dive beneath that relatively benign surface for stocks, mixed surface for stocks, because we do have some big movers to take a look at, starting out with the shares of Boeing popping sharply higher on the news that the FAA has cleared that 737 MAX to get back into the air after a 20-month grounding. Amazing is the fact that over the last 7 trading days, or 8 trading days now, including today, up nearly 40%. So some folks may have been anticipating this. And Spirit Aerosystems, which receives about 60% of their revenue from Boeing, that stock is up about 1.5%. Jefferies has upgraded it to a market perform. Pfizer also higher, up 2.5%, of course, on the news that they and their partner BioNTech are planning to file an emergency use for their vaccine that is now 95% effective. So some really good news there. As for retail, a little bit of a mixed bag. Target is sharply higher. They posted, well, at this point, popping up just a little bit, up about 1%. They posted a big third quarter blowout sales, comps up nearly 21% versus the estimate of up just about 12%. Brian Cornell, the CEO, who instituted this turnaround a few years ago, clearly it's working. He's saying that they are gaining shares. Lowe's, not so much. They missed earnings estimates for their third quarter, and this has to do with a situation similar to Home Depot, rising expenses, in this case having to do with store revamps and COVID-19 expenses. That stock is down. And then TJ Maxx, the treasure hunt goes on, John, up 1.6%. Huge beat on the bottom line. Adjusted earnings, they beat by 79%. And so despite those disappointing or weaker than expected retail sales yesterday, it seems as though folks are going to the bargain stores, the TJ Maxx's of the world, again, looking for that treasure hunt, that elusive item that folks don't have.
Abigail, thank you. This rotation continues 2 minutes into the session. What do they say? It's like a swan. Above the water surface, cool, calm, elegant, not much movement. Beneath the water, legs kicking away aggressively. On the S&P, top line, unchanged on the S&P 500, no movement. Beneath the surface, information technology just a little bit softer. We edge lower by a third of 1%. At the top of the pile, industrials, energy, up by about a half of 1%, 0.6 of 1%. Muted moves, but it's there. That rotation is there. That cyclical appetite returns just a little bit. It's a tug of war. Talked about that at the bottom of the app, between near-term headwinds and long-term tailwinds, causing division on Wall Street. Bank of America telling investors in the last 24 hours it's time to start selling risk assets, writing the following. This was the most bullish fund manager survey of 2020 on the back of the vaccine, election and macro. The November results show a big drop in cash, a 20-year high in GDP expectations, and a big jump in equity exposure. Sell the vaccine, we're close to full bull. It's a market. Here's the other side of the trade. Goldman, they write the following. There is still room for further rotation into riskier assets, as the extent of investor re-risking still seems to be in its initial stages. For more on this debate, let's bring in Katie Lyons. Hey, Katie.
Hey, John. Well, the division is evident when you look at strategists' year-end targets for the S&P 500. On average, that target sits at 3420, which is roughly 200 points below where we are trading this morning, would indicate downside of about 5%. As you alluded to, Bank of America on the more bearish side, as is Julian Emanuel over at BTIG, who sees the index falling to 3,000 by the end of the year. On the more bullish, you have Goldman Sachs, David Kostin having a 3,700 target, and then Cantor Fitzgerald at the highest at 3,750. All of them, of course, seeing 2021 as a better year. One of the key questions, though, in addition to the direction of the market, John, is what is going to lead it higher? If that value rotation that we're seeing this morning and have seen for some time is indeed sustainable, because of course it has been fast and furious, driven in large part by optimism around the vaccine and the recovery. Just taking a look here at the value ETF from Vanguard and iShares combined inflows here 16 consecutive weeks of inflows. That shows you how furious this value trade has been. But at the end of the day, of course, that trade comes down to expectations around growth. And if you're judging by the Federal Reserve estimates, that picture is looking a little bit better. As of June, they saw GDP contracting as much as 7.6% this year. Now the lowest growth estimate is negative 4%. And of course, the central bankers expect growth to return in 2021 into 2022 and 2023. But as we know, John, the Fed has warned of downside risk and told us repeatedly that the trajectory of the recovery in the economy is entirely dependent on the virus, John.
Kelly, thank you. Value, a word we keep hearing about. Value gaps, they're easy to find. Value traps, that's the difficult part. JP Morgan's Jack Caffrey warning investors of value traps with virus risk still looming, saying it's time to get selective. He writes the following: it's prudent to have some exposure to catch-up trades in downtrodden cyclical names. Over a multi-year period, we still think secular growth is one of the best games in town. Jack, great to catch up, sir. That's exactly where I want to start. A catch-up trade is something different to something more durable and sustainable, something that lasts. Walk me through the process you're running through right now when you get more selective.
You know, I do think that when we think about the enthusiasm for 2021 being better than 20 economically, you wind up seeing that investors are going to continue rotating to businesses that wind up being more cyclical. That's a broadening of a market. And under that story, you might not necessarily see the index itself make tremendous gains, especially if you wind up having to sell some of those stocks that have actually, or use some of those stocks that have done so well as funding sources for getting a little bit more exposure to growth, particularly in the industrial sector, to some extent in the materials sector, where you're going to see relatively low inventories meeting improving demand. And I think that gets you that expanding story. And it'll be interesting, ultimately, in the question about value traps, you know, how much has consumer behavior really changed? You know, how willing are people going to be to accept and get the injections that come from these vaccines? You know, there's certainly some mixed stories in that regard. And I think in that regard, the consumer might be a little bit slower to respond than the corporate sector in terms of how they reprioritize their spend.
Jack, a lot to unpack there. With all of that in mind, how selective do you want to get? I mean, I get it. You don't want to buy the market cap S&P 500 index. That's an argument a lot of people have made in the last week. Shall I just make it really simple and get the equal weight S&P 500, or do I need to be a lot more selective?
I think you can, it comes back to your risk tolerance. Moving towards equal weight makes some sense. Moving towards small cap makes some sense. I think also just at the stock level, we're finding opportunities in the industrials. We're finding some interesting opportunities in the material sector. You know, it probably turns to a bit more of a stock pickers market rather than just the stock market overall. And we think that starts creating some more interesting opportunities for people with process, creates opportunity for people who want to take that view, but it also is balancing your horizon. You know, most of the ideas I want to talk about unfold over 12, 18, 24 months rather than necessarily over the next 2 to 3 months. I can't
your
predict
time
what
horizon, if it was 2
tomorrow.
months, Jack, if it was a 2-month time horizon right now, you'd have a very different story to tell based on the next 12 to 18 months. It's about the future, about the future. This is what Jonathan Goller of Credit Suisse wrote this morning. The art of predicting the future in the future. Our 2021 forecasts are designed to answer a simple question. What will the future, 2022, look like in the future at the end of 2021? And he makes the point that by that point, the cyclical trade will largely be behind us. He's neutral on cyclicals going into the end of 2021. Overweight tech, overweight financials. Jack, when you hear that, what would you say back?
I think ultimately, I think in the short term, it sounds like he's almost got a reversal of a classic cyclical expansion trade, where you would typically want to think as we start restarting an economic expansion, you know, the financials normally are what leads us. Consumer discretionary is what leads us. And the industrials move along a little bit later. But, you know, as you were talking about a few moments ago, we haven't really seen the steepening of the yield curve you would have expected. That is, I think, keeping some people away from the financials in the shorter term. I think also there's some concerns about where regulation might go on the financials. And so I think they probably migrate towards more of a mid-cycle trade rather than their traditional position on an early cycle expansion trade. And we also have to think about credit losses. And so to some extent, you know, in this very unusual cycle, you know, we need to see actual vaccine normalization of economic and consumer activity to get comfortable that we have seen peak charge-offs I think that's what's keeping people away from the financials in the shorter term. Industrials are benefiting, I think, from very low inventories. And so there is some reshuffling of the deck. As I mentioned, I like the industrials in the shorter term, and I'm a little bit more cautious on the financials as a result. A year from now, it's very possible that the early cycle trade is done. And you're starting thinking about more normalized, more stable, but I think very extended growth. And I think that gets you back to the more secular stories that actually can continue to grow over the longer term.
Jack, that was the clearest explanation, I think, for everyone to work through this market in the next 18 months or so and some of the considerations you've got to make. Jack, always fantastic to catch up, sir. Jack Caffrey there of JP Morgan. In this market right now, about 10 minutes into the session, we advanced just a little bit at the headline level. Not much price action. It's the rotation that continues. That's where we're advancing, with the small caps outperforming as well. Just a note on programming. Jonathan Golub, Credit Suisse, will be with us on this program tomorrow on that year ahead outlook. Looking forward to that. At the market desk on your movers, here's Abigail.
John, let's keep it super simple and talk about that rotation you have been delving into all morning. Very subtle today, but up top, the best sectors: industrials, financials, materials, those reopening rotation sectors. On bottom, financials and other sectors, technology, I should say. So helping out the industrials, GE up 1.7%, JP Morgan up 1.2%. Not on news, but just the fact that folks want exposure to those names. On the other hand, Apple down slightly on the news that they are cutting their App Store fees to 15% from 30%. That could be a revenue loss. And then finally, Visa, also one of the big drags on the S&P 500 for the tech sector, John.
I think that's Tom Keene playing around with the speaker system in the New York office. Abigail, great to catch up. Thank you. Tom does that sometimes. It's like a child. Coming up, after years of playing laggards, the European banks finally getting their time to shine. That conversation up next with Mandy Zhu at Credit Suisse from London and New York this morning. Good morning. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
very short term, we are very much due for a tough time. We see cases rising significantly across the United States, very high cases in Europe. That is going to restrain the recovery here in the fourth quarter and the first quarter. But I think the vaccine news is good news because it gives investors the freedom to think less month to month and more 12 months out and beyond, which is what we should be doing.
It's what many people are doing. That was JP Morgan's Gabriela Santos recommending investors play the long game. This is the banks finally catch a big bid on both sides of the Atlantic. In Europe, the financial is seeing a 27% gain in the month of November. The Stock 600 Banks Index heading for its strongest monthly gain in nearly a decade. The much-followed KBW Banks Index in the United States absolutely flying as well. Joining us now is Bloomberg's Sarah Ponzek for more. Hey, Sarah.
Hey, John, and first off, don't worry. I'm not going to work Bitcoin into this conversation because the focus
should be...
You just did. But I'm warning you, it won't all be about it. Maybe, okay, we'll put it out of the way. Put it out of the way. Move to the banks because the focus should be on the banks. Really unbelievable that move that we have seen in November. You just highlighted it for us. A 28% gain over in European banks, the best since 2009. Unbelievable, the emergence from the global financial crisis. This, as we have seen positive vaccine news, really ignite a global cyclical rally. At the same time, also better earnings and improved deal prospects. But, John, it does look like Tom Keene is coming over the speaker system again, so we'll bring it back to you in London.
Fun and games with Tom Keene on the loudspeaker in the New York studio. Sarah, thank you. She mentioned Bitcoin. So many of you asked for it. This is it in about 5 seconds. Bitcoin through 18,000 briefly. Now it's 17,867. I think that's the first time I've done that in about maybe 3 years, which was the last time it was at these levels. So do with that information whatever you will. Mandy Zhu at Credit Suisse saying vaccine news will continue to bolster the rotation, writing the following. There are a number of vaccine catalysts in the next month that can further fuel the rally across the cyclicals. We like buying call spreads as a limited risk way to play for further upside in the space. Mandy joins us now over the phone. Mandy, great to catch up with you. Can we just start with this tug of war that everyone keeps bringing up? Forward outlook better, near-term outlook aggressively, the balance of risk aggressively tilted to the downside. When you look at the term structure of the VIX, do you see any of that playing out?
Hey, Jonathan, it's great to see you. It's great to be on the show. So if you look at, in terms of the volatility market, what really stands out to me is that post-election, while we have seen a very dramatic decline in broader market volatility, right, with VIX falling from 40 to now the low 20s, there's been actually significant volatility below the surface. And that's actually been key. And been key in terms of a lot of the sector rotations we've seen, and also key in terms of how investors have done and some of the positioning squeezes that we have seen. So even though broader market volatility has fallen, we've seen record factor volatility, right? So the volatility, the rotation between growth to value, that measure of volatility is currently at a 20-year high. And why that's causing a lot of pain is that coming into this move, a lot of investors were not positioned for it, right? Going to the election, most investors were still very much overweight these secular growers, such as tech and healthcare. And obviously, that worked out immediately after the election, but over the past 2 weeks, we've seen a big rotation away from those names towards the more the value cyclical. So we've seen a lot of rotation, a lot of volatility at the sector level, at the factor level, even though broader market volatility, if you look at the VIX, that's normalized significantly.
Mandy, I've asked the question a few times over the last week about maybe excessive optimism about the future and disregarding the near term. Where would you look personally as you look across your dashboard each morning into the markets? Where would you look for signs of that happening?
Sure. I would say, if you're looking for signs of optimism, there's definitely a few in the option market, particularly in the upside call buying that we're seeing. A lot of the value cyclical names and indices, for example, in financials, industrials, energy, for example, or at the index level, if you look at the Russell 2000, demand for upside calls and small caps is near a year-to-date high. So, you definitely see that in the call buying front, but I would pair that with the positioning data because we know investors are underweight those sectors and those names. So kind of paired together, I would say overall positioning is actually much more modest. And I think people are still pretty cautious and they are dipping their toes in the value trade through options, right? And that's what we recommend is buying upside calls and call spreads in these names as a limited risk way of participating in any, vaccine-driven rally going into year end rather than rotating out of your secular growers completely.
Mandy, that's the more effective way in your mind of playing the upside story, capturing the upside if it develops. Can you walk me through how you would suggest protecting yourself on the downside, given what's happening in America at the moment? You know, I started this program by going through a range of restrictions in America that are being introduced by various states, and we're set to see more, inevitably, in many people's minds in the coming days and weeks. How do you protect yourself from the downside if this market suddenly finds itself not being able to stomach what's coming down at it?
Yeah, sure. So I do agree, that it is a tug of war between near-term risks and kind of long-term, tailwinds, as you called it earlier in the show. And on the near-term front, catalysts, for example, that I would point to is if we get any disappointment in the AstraZeneca vaccine, which we were expecting data for before year-end, and then particularly in the U.S., I would say if the fiscal stimulus talks fall apart, that would be a significant negative catalyst. So the way that I would play it and the way that we've been recommending investors is looking at year-end hedges, particularly with the normalization of volatility in the VIX. So you may be looking at a year-end, like a put spread in the S&P that takes advantage of the fall in volatility that we have seen. And given, the number of near-term catalysts that we have going into year-end. So that's how I would play it on the hedging front.
Mandy Zhu, Credit Suisse. Mandy, always enjoy catching up with you. That's the derivatives trade around the equity market. Tomorrow, we'll get the equity call from the Credit Suisse team. Looking forward to catching up with Jonathan Gollop on his call of 40.50 year-end 2021. John has been very constructive on the tech story. He remains that way going into next year. Overweight big tech, financials in the mix, but neutral on cyclicals. He thinks by the time you get into next year, that cyclical trade is going to be behind us. I'm looking forward to that conversation. I want to head back to the market desk, get you the sector price action. Interesting moves beneath the surface. With them, here's Abigail.
Hi there, John. Well, there are certainly interesting moves beneath the surface because the S&P 500, as you know, just about flat. But beneath the surface, it looks a lot more risk on than that mild move up. And the reason being, first of all, most sectors for the S&P 500 are trading higher, so folks want in on stocks. But really bringing on that risk-on tone is the cyclical trade that we've been talking about all morning. Financials, energy, industrials, and materials. Those are the top 4 sectors. Not huge gains. So like yesterday, it's very subtle. And yesterday was even more subtle because it was a matter of outperformance with sectors down. But nonetheless, you have those cyclical sectors up top. On bottom, tech and communication services. So investors mildly selling out of the big tech names with those sectors down about 0.3%. What's so interesting is yesterday it was a pretty even split over the last 5 days. Now, over the last 5 days, the cyclical trade is really the dominant trade because the top 4 sectors over the last 4 days are, in fact, energy, industrials, financials, and real estate. So the bulls want in on those cyclical sectors. We're seeing that today. We're seeing that over the last few days. Let's see if it can continue, John, because that's been the big question on this on-again, off-again trade. But right now, it does seem to be pretty on.
Energy still down hard over the last year. Abigail, thank you. Coming up on this program, the market-moving events you need to be watching. That'll be next in our trading diary. From London and New York this morning, good morning. This is Bloomberg. 95 is the number of the day. 95% effective, Pfizer's vaccine. That's the good news. It sends the Russell to a new intraday record high. The outperformance on the small caps in America, the underperformance on big tech. We're down 1/3% on the Nasdaq. That's the story of the equity market. Here's the story of the week ahead. President-elect Joe Biden hosting a virtual roundtable with frontline healthcare workers in Wilmington, Delaware today. We'll also hear from a number of Fed presidents, Williams, Bullard, Bostic, and Kaplan. We'll get another round of initial jobless claims and existing home sales tomorrow morning. And on Friday, it's the deadline for the presidential recount in Georgia. From London and New York this morning, good morning. That does it for us. Catch me on Twitter at Fero TV. They introduced this thing called Fleets. Don't know what it is, tried it, don't know what you think of it. Catch me there and tell me what you think of it. For our audience worldwide, this was the countdown to the open. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
So how many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
This new law that came down from China's National People's Congress Committee ended up leading to the disqualification of 4 pro-democracy lawmakers.
This is probably the very final and complete crackdown.
I hope you understand it is not anything new at all. This was supposed to happen.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of in life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
that moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
So there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. election.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC come to China, come to us, say,
24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Value-Ag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light in being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when you see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力 ，Blue 能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I just did a sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. And it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch.
This is the hardest nigga of all time.
He said when you come for a chigga like me. That was dope.
It's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, just like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell. What could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chigga. I want to touch him.
What do you guys think of Joji?
He's
my
God! That's my dad, son.
Did you guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But 88 Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for 88's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store when customers touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs?
Definitely.
Definitely. Right.
Yeah.
And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's
Jade.
Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably.
He's written it out bigger on the board. Thank you.
Today's the first day that I've been in school via B, and so far it's interesting. There's still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work. I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I could throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうとどの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとはキャラクターとしてすごくYouTube とかで検索するとたくさんの初音ミクが出てくるんですけども、元々の初音ミクのその原点は歌声を合成するソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていう存在自体がボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本だった。そういうことが演奏によって起こせるためのそういう器みたいな感じになっています。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在しています。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit.
And action!
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone it's a girl, superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like,
Canada,
is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, wear the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone.
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's a girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rusovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rusovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner, and they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivasAChance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, A big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned even if there are swerves ahead.
Laura, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions, and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yep.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. Yes. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that the there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, etc., but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So, because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
Is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Wednesday, hump day, November 18th, 2020. We've got another step towards the COVID vaccine. More news from Pfizer. Stocks kind of meh about it all, but the rotation continuing with small caps leading the way. We're going to talk about that. We've also got a great lineup. We're taking you to the farm, the fiscal cliff facing Americans, and we're also going to explain why Spot, yes, Spot the dog, is in charge. We'll get to that in just a moment. First up, though, let's set the tone and the trading day on this Wednesday. What's up, Charlie Pellet?
Well, hello there. Market's not up. I'll tell you that, Carol Master. We've got the Dow, the S&P, Nasdaq all on the minus side right now. Investors weighing signs that scientists are making fast progress toward a coronavirus vaccine with news of fresh restrictions to curtail the spread. Right now, Pfizer up 1.4%. BioNTech is up 3.7%. Moderna, which had the big announcement Monday, down now by 4.4%. S&P trading lower, down 7, a drop there of 0.2%. The Dow down 40 points. That is a drop of 0.1%. Nasdaq is slumping 16, lower now by 0.1%. 10-year down 730 seconds. 10-year yield there 0.88%, and gold down 0.4%. 18.72 the ounce. West Texas Intermediate crude up 1.8%. 42.18 a barrel. Let the show begin. That's a Bloomberg Business Flash.
We now can. Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. It's brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. So let's learn more about our market trade on this Wednesday. Let's set the Business Week agenda. Katie Greifeld is with us, cross-asset reporter at Bloomberg News, in our Bloomberg Interactive Brokers studio, along with Dave Wilson, stocks editor at Bloomberg News. He's on the remote access from New Jersey. Dave, first set the tone. Charlie breaking down those big numbers. I said it's kind of meh on Wall Street. Investors not really that much more impressed with the latest news from Pfizer.
Yeah, meh is as good a way as any to put
it. It's a technical term.
Yeah, exactly. I mean, especially with the S&P 500 just bouncing off its lows for the day. I mean, there are some individual stories that are interesting. Some earnings reports that are moving stocks. The numbers out of Target went over well. The numbers out of Lowe's did not. So, you're talking about with Target, one of the biggest gains in the S&P 500, and with Lowe's, one of the sharpest declines. In fact, the sharpest at the moment in the S&P 500. None of the 11 main industry groups in the index are up or down even 1%. We're seeing some gains among energy stocks, but, as a group, they're a little changed right now. To the extent that there is an advance, though, it's sort of the more economically sensitive areas of the market, the value stocks, industrial, financial companies, raw material producers, and that's certainly consistent with what we've been seeing lately in sort of that shift away from, shall we say, big tech companies.
Well, speaking of that, shift away from big tech and into small cap companies, and that's what we kicked off the show. The rotation, Katie, it continues.
That's correct. It's still underway. It's still there, but it is evolving, I'll say. The Russell 2000, it's still up, even though we are taking a leg lower here. It's up about 0.3%. And you look at the Nasdaq 100, it's down slightly now, but it's still up 0.3%. So it is still a rotation into small caps, but maybe not necessarily out of tech. And I think that's a really healthy sign, because when you think about how top heavy indexes like the S&P 500 are, the big FANG names, they make up over 20% of the S&P 500. So if big tech falls, you're not going to see those indexes go anywhere.
Right.
So the fact that
they just can't because of the weightings.
The math doesn't work out. So the fact that tech is sort of treading water here, that's a good sign. That means that you do get that breadth, and small beaten down areas of the market can rally, but the indexes will also gain.
Well, it's interesting. Go ahead, Dave. It sounds like you want to say something.
Oh, I'm just actually...
Or maybe you were just sighing. I don't know.
Yeah, I tend to do that now and again, but I just put a chart out on Twitter that, somebody else had. You talk about the Nasdaq 100 index. It's actually sort of been bouncing around above and below 12,000 going back to August, and sure enough, it's kind of struggling there. Again, sometimes it seems like round numbers are like magnets for stocks. How many years did the S&P 500 struggle to get above 1,000, let alone, where we are now in the 3,000. So, it's interesting to see that happen, and it's sort of consistent with the idea that, the larger technology-oriented companies are kind of stumbling here.
I have to say, I always remember one market strategist, I think it was Joe Battipaglia of maybe he was with Gruntle at the time.
He was there. I think a couple of other firms as well.
And I know he's passed, and we really miss speaking to him, but I just remember going around his office, and he had when I think it was the Dow hit major marks, and it was just how long it took to go from 1,000 to just to move along, and then all of a sudden we've just seen so many different top lines, Katie, taken out.
We're talking about 30,000 now on the Dow,
which is just
we're almost there.
Yeah, exactly. Well, anything interesting in terms of the virus rotation too, and the virus news? I mean, I think I really do feel like, Dave, come on in on this, because I do feel like a week ago, this past Monday, when we first got that Pfizer news, we were really enthusiastic. You saw investors piling in, risk trade was on. But we've gotten, like we like to do it at Bloomberg, we're like, well, wait a minute, though. There's a lot to go before we start to roll out that vaccine completely. And even though Moderna came out and we got another news, some more news from Pfizer, it's good. It's what we expect. It's progress, right? But it still is going to take some time. And we still have a market environment, a Main Street environment of small businesses that are struggling. And who knows what that's going to mean for the U.S. economy.
Yeah, absolutely. I mean, when you put it all together, I'm just looking at the S&P 500's main industry groups for November, so the month to date.
Mm-hmm.
We've seen the S&P 500 itself up more than 10%, but you look, it's leading the way. I mean, it's the kind of companies we're sort of at the forefront today.
Yeah.
Energy producers, industrial companies, raw material producers, financial stocks, all beating the S&P 500 by pretty substantial margins. Technology kind of holding its own. But the other groups kind of touched by big tech, if you will, communication services, and that consumer discretionary category, which is really Amazon.com at this point, not quite keeping up.
Yeah.
So, what we're seeing today is what, consistent with what we've seen for the last few weeks anyway. I mean, as much as the issues for smaller companies are certainly out there, so far the market's kind of shrugging them off, it would seem, to some extent.
All right, so Dave is our true blue stock guy, but Katie, what we also like about having about you is you talk about the equity markets, but you also talk about, different kinds of assets that are out there, including the bond market. I saw there was a 20-year bond auction. Anything interesting in the trade there?
Well, I'm so happy to talk about bonds, and it's remarkable how even with that 20-year auction, bonds are...
If I had a nickel for every time someone said, I'm so happy to talk about bonds.
Yeah, there's a few of the people in this building probably would agree with me, but bonds are totally unruffled this week, even with that big 20-year auction. The 10-year Treasury yield, it's moved in basically a 6 basis point range this week, which is really small, especially when you consider just the waves of good vaccine news we've been getting. But I think that gets back to those different timelines, that there's a lot of economic pain ahead potentially before we get a virus. And we heard from Fed Chair Powell yesterday. He didn't sound that optimistic. He said we have a long way to go in this recovery. It has significant downside risks in the near term. And he did acknowledge that even with a vaccine, that's medium-term good news. So I think bond traders are focused on that gloomy
He, like others, Jamie Dimon, there's a story like, we need some stimulus, folks. Let's get it done. All right, Katie Greifeld, thank you so much. Always fun to have you here. Katie Greifeld, cross-asset reporter at Bloomberg News. She's in our Bloomberg Interactive Broker studio, along with Bloomberg Stocks columnist Dave Wilson. He's on the Access line. He'll be back a little bit later on with his chart and stock of the day. I do just want to talk a little bit about our lineup. It's pretty amazing. We are going to talk a little bit more about that Pfizer news, the latest on COVID. Alyssa Rapp, CEO of Surgical Solutions, she's back. We're also going to talk agriculture. We're going to do that with the president and CEO of Mahindra Agriculture North America. They're seeing what's going on with the virus and how it's impacting really the farming industry and really tractors. That's where they play. We've got NVIDIA earnings after the close, and we're going to ask, what do these 5 companies have in common? We're talking about Intel, Walt Disney, General Mills, American Express, and Amgen. You're going to have to stick around for the answer. Got another question. Guess what our pets are training us to do? That is a big story in the magazine this week. And finally, her folklore continues to be made and told. And as only Bloomberg can do, we're going to dig into Taylor Swift as a bulletproof investment. All right, lots to come over the next 4 hours. Let's get a check, though, on world and national news. For that, over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Pfizer says its final analysis of clinical trial data shows its COVID-19 vaccine is 95% effective, paving the way for the company to be the first to apply for quick regulatory authorization for a coronavirus shot, and it could happen within days. Moderna says its vaccine is 94.5% effective. This is Health and Human Services Secretary Alex Azar.
By the end of December, we expect to have about 40 million doses of these 2 vaccines available for distribution, pending FDA authorization, enough to vaccinate about 20 million of our most vulnerable Americans.
He says the vaccine will likely be distributed through pharmacies across the country. Well, while the country waits for wide distribution of a vaccine, people continue to wait in long lines to be tested for coronavirus. But there is more encouraging news today. The FDA has approved a home testing kit that could give you results in 30 minutes or less. Dr. Ashish Shah is Dean of the Brown University School of Public Health.
I'm happy to see the FDA approving this. The problem right now is we don't know how many of these tests will be available, how long it'll take to get the tests out there.
The kit is expected to cost around $50, and consumers will need a prescription to acquire it. President-elect Joe Biden is meeting virtually with healthcare workers today. The nation will likely record its 250,000th death at some point today. Democrats appear to be uniting behind House Speaker Nancy Pelosi. Today they voted to stick with her as their leader and nominee for Speaker in the next legislative session. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Bloomberg Interactive Brokers studio. Joining me, my buddy Charlie Pellet of Bloomberg News. And let's talk about some of the virus headlines. There's a bunch, and I know we're going to talk about one about the MTA, but we'll do that a little bit later. Certainly of interest to our New York listeners. But we do have a story about COVID ranging in long-term care centers at the fastest pace since May. This worries me, Charlie. This, we know, is among the most vulnerable populations. And in the first wave, these are the individuals, older individuals in long-term care centers and nursing homes that really, really got hurt by COVID-19.
Carol, I saw this story, and heartbreaking.
Yeah.
Absolutely heartbreaking is the word that comes to mind here. Heartbreaking because of the people who are in these long-term care centers who are truly among the most vulnerable, but heartbreaking as well because we're coming up on Thanksgiving. We're coming up on a lot of holidays for a lot of people. We're coming up on New Year's, and it just seems inevitable that there are going to be tighter restrictions on family members who want to share this great time of the year with loved ones. They're going to be told no.
Yeah, and I got to tell you, I'm going to talk about this with our next guest, Alyssa Rapp, and talk about, how worried she is maybe about Thanksgiving, the holidays, ultimately ending up being kind of super spreader events at some point when it comes to the fight against this. This story, though, about long-term care centers, less than 1% of the U.S. population lives in such homes, but check it out, everybody. COVID-19 fatalities inside of them account for 40% of the national death toll. Charlie, we know this. We've seen the headlines. But again, it's just a reminder. As you said, it's heartbreaking because these are the people who are really, really at risk. Exactly.
And also, too, just in terms of, we talked to a national audience. Ohio, if you're wondering, saw the largest increase last week, making up 10% of all new cases in facilities across the country.
In total, last week, states reporting more than 29,000 new COVID-19 cases in places such as nursing homes and assisted living facilities. Counts rose roughly 17% week over week, the steepest acceleration since May when we began tracking that data. So really, really tough. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and you are listening to Bloomberg.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story. This headline from the Bloomberg Professional Service. The New York City school system will temporarily close tomorrow. COVID, of course, rising caseload is the culprit. This, according to the New York Times. Worth repeating, New York City school system will temporarily close tomorrow. Equities lower right now across the board. The Dow, the S&P, and Nasdaq all trading lower. Let's begin with the Nasdaq 100 index down 0.2%. Nasdaq is down 0.2%. The S&P 500 index down 11, a drop there of 0.3%. The Dow down 60, a drop now of 0.2%. Should point out that the Russell 2000 does remain higher, up now by 0.2%. We've got the 10-year down 7/30 seconds, 10-year yield 0.88%. Gold down 0.5%, 18.71 the ounce, and West Texas Intermediate crude holding on to a gain of 0.9%, 41.81 a barrel. Those are the numbers. The reason here, stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadow signs that scientists are making fast progress toward a vaccine. Repeating, New York City school system will temporarily close tomorrow. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed, and a big headline there, no doubt about it. Thank you so much, Charlie. Appreciate it. Well, so a lot of virus headlines today. Charlie, of course, just mentioning the New York Times saying that New York City schools to shut amid rising virus cases. That sounds like, as he said, a temporary shutdown. We're also reporting that's kind of the worrisome news, right? Although that's what you want to see cities kind of pull back as we start to see those numbers go up to try and rein them in. We've also had some upbeat news. Pfizer saying a final analysis of clinical trial data showing its vaccine was 95% effective. So that is helping to pave the way for the company to apply for the first U.S. regulatory authorization for a coronavirus shot within days. There is a lot going on. Talk about a self-testing kit for home, that happening in the United States. Over in Europe, though, you did see a protest over Germany's strategy to quell the virus turning violent. So, yeah, it's really rough out there. And this is a place environment we all know far too well. Back with us to see what she is seeing and concerned about is Alyssa Rapp, CEO of the healthcare solutions company Surgical Solutions. She is with us on the phone from Deerfield, Illinois. Alyssa, good to have you here. How are you? And when you see these headlines, you're out there in the Midwest. I mean, that's really been a tough spot.
It has, Carolyn. Thanks for having me back.
Yeah.
We've seen a rise in surge across the country, candidly. Our incidences of exposure or even positivity in our own company amongst our 250 employees across 9 states and 35 hospitals is pretty much even. We've seen additional, exposure or positivity in New York, Tennessee, Texas, Kentucky, and it is obviously back. I'm not an epidemiologist, as you know, so I know that the viral load of the virus changes over time, and it makes it easier to transmit. So hopefully people who are getting this version of this horrible COVID-19 flu are not going to be as sick if they're healthy and young, but it is back. The numbers are real. We're seeing it across the country.
Well, and it's interesting. We just talked about a story, Charlie Pellet and I, about how COVID is ravaging those long-term care centers, and we know that's where the elderly population is. We understand those numbers, but I was just talking to an individual here at Bloomberg and talked about her nephew succumbing to the virus. So we do understand that as much as we know some of COVID-19 is predictable, we also know that there are outliers, and we don't know still a lot about this virus. Having said that, the vaccine and the developments we've had over the last week and a half from Pfizer and from Moderna, what's your takeaway there?
Oh, I find it incredibly encouraging. I think the vaccines are going to be game changers, needless to say, and the only real question in my mind as a healthcare service provider is a question around distribution.
Right.
If they need to be stored between 50 and 100 below Fahrenheit, then obviously we need the military and FedEx and UPS working together on a combined distribution strategy that leverages single sites that have these massive freezers as well as mobile sites. And I think creativity and real genius in terms of logistics and planning is going to be what needs to happen between now and, say, April, May, June, when we get to true general population rollout of the virus. But for frontline healthcare workers, I'm still pretty bullish and optimistic, because if those vaccines can start happening in our major metropolises and major sites in December, the second shot in January, whether it's the Pfizer, Moderna, or any other vaccine, that means that if we can get first responders and frontline healthcare workers vaccinated, then the most at risk, then the rollout further, there should be an abatement of the spread, and it should provide some relief to our healthcare system.
Well, and you've got to be thinking, Alyssa, about your workers specifically, right? And making sure that they are frontline workers and they need to have access to this vaccine. I'm curious how you're approaching it. Would you make sure that they're among the first to get it? Are your workers comfortable getting it? And are you concerned about having access ultimately to the vaccine as we kind of try and figure out the distribution and logistics problems of getting the vaccine out?
Those are all great questions. I feel confident in our frontline healthcare workers' ability to get access to the vaccine because we follow each hospital's protocol for all things clinical when we work with our hospital partners. And if their frontline teams are going to be asked to vaccinate, ours will too. And so if it's being provided to hospitals across the country for their frontline workers, I am hopeful and confident we will get that access. And I think that the first 20 million doses of the vaccine seem pretty locked and loaded for December. So again, if we can make sure that happens and nothing stops it, I think the frontline and first responders should be in good shape. It's really that next wave of rollout, Carol, that I personally am curious about once our frontline healthcare workers are taken care of and the countries, after the prioritization for the elderly and the most at risk. How then do we ensure that mass distribution happens? I'm confident by the spring we'll have mass production of vaccine. Mass distribution becomes a bigger challenge.
Yeah, listen, I think about that too in terms of it getting out. And, we've done a lot of reporting about that's kind of our next big headache. And because, countries have relationships and deals with various drug makers, and so you really do wonder, what kind of horse trading might ultimately be going on, and that kind of terrifies me, especially when I think about people who really need it. When I think about developing markets, I mean, it's really going to be, I think, a logistics nightmare.
Globally, it's going to be challenging. And remember, the regular flu vaccine can be stored at 37 degrees Fahrenheit and below. And even that sometimes poses challenges. And this 100-degree below is a real thing. But I know that the biggest sites of points of distribution are already shoring up for those capabilities. I'm confident that in our country, specifically the ingenuity around distribution and logistics means that we should be able to come up with a mobile mechanism for distributing even this very unusually cold vaccine. So I'm hopeful. I think that we'll see a lot of opening up come next summer.
All right. Sit tight for a second, Alyssa. We'll come back and continue. Alyssa Rapp is with us, Chief Executive Officer, Surgical Solutions, on the phone from Deerfield, Illinois. I do want to see what she has to say about schools and just cities kind of quickly reacting to what's out there and how that might maybe help us in this process. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so just on the heels of that headline that New York City schools will close tomorrow, we are going to continue talking about the impact COVID is having on our economy here in the United States and the expectations about what life like is on basically the other side of COVID once we get through a vaccine. So we'll get to that a little bit more with Alyssa Rapp, CEO of Surgical Solutions, in just a moment. First up, though, back to your top business stories and Charlie Pellet.
Hi, thank you very much. That New York City news certainly not helping markets, Carol. The Dow, the S&P, and Nasdaq at or near session lows right now. Slight bounce off the bottom on the S&P. Let's get right to the numbers. I'll give you the why in a moment. The S&P down 15 now, a drop of 0.4%. The Dow is slumping 117 points, a drop there of 0.4%. Nasdaq down 24, a drop there of 0.2%. Both the Dow and the S&P retreating further from Monday's record. Stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadows signs that scientists are making fast progress toward a vaccine. Pfizer said a final analysis of clinical trial data showed its COVID-19 vaccine is 95% effective, paving the way for the company to apply for the first U.S. regulatory authorization for a coronavirus shot within days. The U.S. drug maker and partner BioNTech said their vaccine protected people of all ages and ethnicities with no significant safety problems so far in a trial that includes almost 44,000 participants. Shares of Pfizer, they're up today by 1.4%. BioNTech up by 3.5%. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
It's exciting to see both these mRNA vaccines have similar data. I think it means that this is a platform that we can continue to explore moving forward with vaccine technology. And it was somewhat unknown before this. It hadn't gone through a full FDA approval process, and so I think everyone is really excited to see them push forward both to the EUA and ultimately to FDA approval.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. And recapping, stocks lower across the board. 10-year down 6/30 seconds, the yield there 0.87%. Spot gold down 0.4%, 18.73 the ounce. West Texas Intermediate crude up 1.1%, 41.88 a barrel. Recapping, S&P down 13, a drop of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Alyssa Rapp, CEO of the Healthcare Solutions Company. It is Surgical Solutions. She's still with us on the phone from Deerfield, Illinois. So, Alyssa, I know we've talked about schools. I know last time around we talked about, and I think you said that you don't think children are super spreaders because we were talking about schools reopening. I have to say, it's interesting. I'm getting a lot of emails from around the newsroom about, see, look, New York City schools are closing. I actually think cities are being smart, that as soon as they start to see numbers go up in certain regions around the country, as soon as they start to see those numbers go up, I mean, New York remembers how bad it was. And I think they quickly moved to say, we got to pull back. And that's how we hopefully can maybe prevent this from becoming New York City back in March, April, and May.
Yeah, there are two different questions, right, Carol? One is, are children super spreaders? And there's an abundance of data, and you've had many people on your show that have talked about how they may or may not be, and most likely aren't. But there are other stakeholders, and stakeholders are teachers and the elderly family members of children in schools who are living in multi-generational households. So I think the answer to whether to keep them open or closed is a function of from whose stakeholders' eyes you're looking. And I think that it's likely and probable that many public schools will end up closing post-Thanksgiving, pre-winter break, quote unquote, or even right after winter break, because as we discussed earlier, this vaccine access is likely going to be healthcare workers and first responders first, and then hopefully in the second wave, as soon as January even, teachers and others who we consider essential workers. So I'm hopeful that once teachers have access more broadly to the vaccine, then there'll be even greater comfort with keeping the schools open. But I think it's likely that to continue to, quote, flatten the curve, you can agree or disagree, but I think it's likely that schools will close for some portion of winter.
Yeah, and I guess what I was kind of saying is, I think I agree with you because just my own experience with my daughter in school, the schools have been, I feel like, knock on wood, we're not necessarily talking about colleges and universities, they have had their own struggles, but I think at large things have actually gone fairly well. And I guess what is interesting is that you're seeing, whether it's the West Coast, whether it's here, major cities who saw it so badly in the springtime, like we remember this, it wasn't that long ago, right? And we don't want to go back to it, so that you start to, as soon as you start to see those numbers go up, you kind of rein things in just to hopefully slow it down, and more importantly, hopefully to stop it from spiking once again into that kind of out of control area.
Yeah, and I think that it's also a function of how things have been managed, right? If we're in a hybrid learning environment in our public school district here in the suburbs of Chicago, and all the children have plexiglass shields, everyone's masked, so the classroom's 8 students or less, we certainly may end up in a virtual learning mode for a portion of winter, just like most public schools, but none of the transmission in our suburban school district has happened within the schools. It's happened from people bringing it in from the outside, so that gives, I think, many parents great comfort that schools are safe, kids are safe in schools. It's the community spread is going to be what it is. But again, I stand by my earlier claim that I don't personally believe from the data I've read that children under 10 are super spreaders by and large themselves. But I understand, when taking into account multiple stakeholder groups, why schools may choose, and public districts may choose to close for a portion of winter until these vaccines are more widely disseminated.
Right. Well said. Hey, listen, I want to go back to something you said, Alyssa, because I think it's really important. And we've only got about a minute or so left here. You said logistically, we're going to need military in partnership with FedEx. People have been saying since March, April that we are at war. It's a health war, and we need kind of a military aspect and reaction to it, if you will. And we really kind of haven't gotten that. Do you think a new administration will move in that direction?
I think that it's likely that a new administration would be willing to leverage all tools at its disposal, including the U.S. military, to ensure the broadest dissemination of this vaccine as quickly as possible. And I also believe that our U.S. military is probably uniquely qualified to provide support to commercial parties like FedEx and UPS in that way. So I really hope for a public-private partnership in terms of distribution of the vaccine. I think it gives us the greatest probability of the greatest dissemination the fastest.
If we don't get that, what then? Just quickly.
I'm not thinking about it yet. I'm thinking positively here, Carol. We're going to get it done so we can have more normal lives by next summer.
Hallelujah. I'm an optimist too, and I'd like to get back to a more normal life. Alyssa, thank you so much for finding time once again for us. Alyssa Rapp, she is Chief Executive Officer of Surgical Solutions, joining us on the phone from Deerfield, Illinois. And again, watching those virus headlines, but optimistic about the vaccine, and ultimately, if we do it right in terms of how we get it out logistically and the distribution, we can move much closer and much faster to a more normal life. So that's what we're kind of all hoping for. All right, coming up, we're going to dig into the magazine. Got a story. It's about man's best friend, or friends, I should say, and how they're kind of telling us what to do. We'll get into that in just a moment. Let's get back to world and national news headlines. For that, over to Nancy Lyons in our D.C. newsroom. Hiya, Nance.
Hey, Carol. The Trump campaign is still contesting votes, with the campaign seeking a partial recount of ballots in the swing state of Wisconsin. Trump officials have already wired $3 million to cover the cost. A full recount was estimated to run about $8 million. Joe Biden currently leads President Trump by more than 20,000 votes in Wisconsin. Well, as President Trump continues to challenge results in various states, he is still blocking President-elect Joe Biden from receiving national security briefings. Republican Senator Lindsey Graham does not agree with that approach.
The president is contesting the election, and I would urge him to give intel briefings to Joe Biden. How much further to go, I don't know. We're going to be fine. At the end of the day, this thing will work itself out. It always has, and it will here.
Control of the Senate remains on a knife's edge ahead of runoff races in Georgia. Bloomberg's Nathan Hager has the latest on that.
A new poll from the Fox station in Atlanta shows Republican Senator Kelly Loeffler essentially tied with her Democratic challenger Raphael Warnock, 48 to 49%. Republican Senator David Perdue and Democrat John Ossoff both get 49% support in their race. The poll also shows support for Republican Georgia Governor Brian Kemp slipping to 37%. President Trump has been accusing him and other state officials of mismanaging the November election. The runoff in Georgia is January 5th. In Washington, I'm Nathan Hager, Bloomberg Radio.
Nancy Pelosi is on track to be the next Speaker of the House. Democrats today voted to stick with her for that position. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week on this Wednesday. Carol Masser joining me right now, once again, is Charlie Pellet. Listen, we've been talking about this story, right? Those of us who live in the New York metro area, New York City, commute in, commute out, kind of love our mass transportation. But man, Charlie, it might be headed for a really rough time.
The numbers are absolutely staggering today from the Metropolitan Transportation Authority. Says it might have to slash subways and buses by 40%. And
wait, 40%.
40%.
That's huge.
The cuts are unbelievable.
Yeah.
And that's just the buses, the subways that you see in New York City. We're talking about commuter rail, which would involve the Long Island Railroad. And for people who are not from the New York City area, also Metro North that extends up to Connecticut and also to the counties north of New York.
Gotta just say, it can't happen because once we get back to normal, we need mass transportation to work because the majority of New Yorkers or individuals who work in the New York metro area but come to New York to work, unless, you know, that 40% are going to be working from home forever, we need them so that they can get back to the city and really help the city economy.
And also, too, there's the human component of this. Yes, people who use mass transit to get to and from work, they're watching these developments closely. But also the people, the men and women who work at the MTA,
Yep.
they might have to get rid of 9,300 jobs. However, and there is a big however, there's a major if in this story, and that is if aid does not come from Washington. So perhaps at one level, very much a New York City story in terms of the consequences. Ultimately, though, New York City looking to Washington for help.
Check this out, though. The MTA now estimating ridership will not reach 80% of pre-pandemic levels until 2024 in a best-case scenario. That's at least some data put out by McKinsey. Earlier projections, though, didn't anticipate returning to pre-pandemic levels till almost 2023. So not so great.
Very briefly, I ride the New York City subway system on a virtually daily basis.
You are the voice of the New York subway system.
I'm seeing more and more people coming back to the subways.
Yeah, my daughter who's been on the subways, she says the same thing. It's getting much, much busier. All right, Charlie Pellet, thank you so much, the voice of New York subways. Charlie Pellet, this is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower, small caps push higher. The Dow, the S&P, and Nasdaq bouncing off the bottom. Stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadow signs that scientists are making fast progress toward a vaccine. The dollar nearing its lowest level in 2 years. S&P down 9 now. That's a drop of 0.3%. The Dow is down 67, also lower by 0.2%. Nasdaq down 5, a drop of less than 0.1%. 10 years down 7/30 seconds. 10-year yield 0.88%. Gold down 6.58 the ounce, a drop of 0.3% at 18.73. Talking about the price of spot gold. West Texas Intermediate crude up 1.1%. 41.90 a barrel on WTI. After earnings this morning, Target surging 4.7%. People stocking up. Lowe's Corporation, the home improvement retailer, heading the other direction, down now by 6.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week, and the cover story this week, and I got to say, I don't know if I can say this, Joel Weber, can I just say I got a peek at the cover art?
You did last night.
I have to say it truly encapsulates the essence of this story.
Yeah, it's a fun one, and this is one that I think we've been interested in for a while because look, like the staff of Business Week has a lot of cats and dogs at home, and there have been acquisitions that were made during the pandemic. And if you have a dog and go to a dog park like I do, you also recognize that there were many, many, many more dogs in this neighborhood than there were before the pandemic. And one of the big beneficiaries of this has been Chewy, the online pet retailer that does pet deliveries, and that's what our story's about.
All right. So, of course, Bloomberg Business Week editor Joel Weber. Sorry, I jumped the gun there, but I wanted to bring you in because I love the cover. And let's also bring in Bloomberg News Wealth reporter Anders Mellin, reporting for Business Week and on the phone from Orlando, Florida. Joel on the phone from the remote access from Brooklyn. It is, and I got to say, Joel, it's one of those things in the shutdown that as I would walk my dog Scout around the very quiet neighborhood, I would see boxes of things, and I often saw Chewy boxes on the curb.
Yeah, and they're coming to our house too. It's actually in one of our story meetings. It turns out that there's a lot of co-op apartments in New York City that aren't supposed to have pets.
Oops.
And Chewy boxes are outing them because it's like, oh look,
where'd that come from?
A dog food delivery. Yeah, exactly. So the story of Chewy, though, I think it's one of these amazing ones because the company's been around for 9 years. Started basically by a couple guys who just realized they were going to get into the jewelry business, and then realized, wait a second, there could be a bigger opportunity in pets. And they basically scrapped it out for 9 years, and in the process of that, sort of faded from the company, and the company now has a new CEO. And the story sort of starts with Anders crunching some numbers and realizing that he's actually incredibly highly compensated. How highly compensated is he, Anders?
About 108 million for 2019. That's what brought me onto this story. We ran our highest paid CEOs list this summer, and Sumit Singh made 108 million last year. And I turned to my editor and said, "Who in the world is Sumit Singh?" And turns out he's the CEO of Chewy, and that's where it all started.
Right, and it's kind of like, what is Chewy? I have to say, we have a market guest who comes on, and every time she's like, buy Chewy, buy Chewy, buy Chewy. I mean, this is a business, and you put it in the story, Anders, that it's very much kind of akin to Amazon in its early days.
Yeah, it really is. It's what sets it apart from Amazon. Amazon was a model for much of the quickness, the ease, and the pricing. But what really sets Chewy apart is the fact that you actually have a customer service number to call, and if you call it, there's a person that responds to you within 6 seconds and is willing to talk to you 4 hours if that's what you feel like, about your pet, about pet food, about the fact that, anything. I've heard stories of customer service agents who've literally been on the phone for several hours with pet owners that call in.
One of the things, Carol, that I think is really interesting about the business is, Amazon, when it started, it had that one area of expertise that it just nailed, which was books. It was like, how do we bring as many books as we possibly can online and do e-commerce as a bookstore, right?
Right.
And I think Chewy actually kind of like, it's almost like they surveyed the landscape and said, what's the thing that we could have recurring payments with that Amazon hasn't thought to do yet? And how do we figure out what that is and then do it at warp speed effectively? And they recognize that pets are this thing. It's the number in the story, $99 billion a year is being spent by Americans on pets. If you could get one slice of that, it's a great business. And what they figured out was that there's a lot of things that you can do that are recurring payments, whether it's dog food deliveries or medications, and all of those things are just cruise controlled. It's a subscription revenue model, and it has just allowed them to go sort of warp speed. And they were on a pretty good trajectory before the pandemic, and then the pandemic really played to it. And so, Anders, tell us about what how they've really capitalized on everything this year.
Yeah, they've already, in the first 2 quarters, they added more customers than in all of the prior fiscal year. And they're on track to finally turn EBITDA positive this year. And they are also on track to hit roughly $7 billion in revenue, up from, if I don't misremember, around 4.9 in 2019. So it's really supercharged them this year. And they were sort of kind of like Peloton, just perfectly in position to take advantage of the coronavirus.
We've been buying our Scout. She's a little Irish Terrier, man. She's been getting toys, and we've got a subscription thing that we do every month too. And it's like, yep, we don't even think twice about it. We're like, it's essential. It's kind of crazy. So wait a minute though. We said they were like kind of Amazon, right? In many ways. And it sounds like they are too also like Amazon for a long time. They're not profitable.
Not yet. And, that's a story that is not too unfamiliar these days, that you set aside profitability and instead focus on growing very quickly, and that's what they did. And the founder, Ryan Cohen, and his team, they actually ripped the page out of Amazon's playbook and said, we're going to plow every dollar of free cash flow that we get into marketing and customer acquisition. But he points out in the story that at any point they could have turned off that marketing spigot and the company would have been profitable even back in 2015, 2016. So it's really about, running and getting scale as long as you can, as long as your capital base allows you to do that. And that's what they've done, and that's why they're so big today.
And actually, I love it because the CEO brought this up when you guys kind of put it to him, is this flywheel, this idea that, and it's a vaunted one that Amazon's really excelled, is sort of like once you can start spinning off cash, it feeds all the other aspirations that you have. What did he have to say about his flywheel?
Well, essentially saying that it's a very sturdy model as long as you're not burning too much cash, then that's something that you can keep up. And as long as you keep acquiring customers at a fast enough clip, then that flywheel keeps up. And thanks to Chewy's focus on auto ship and the fact that people had to return to them every once in a while to buy cat litter and food and so on, and you can put that on automation, that really helps to underwrite this whole model, and it works.
Anders, really quickly, so Sumit Singh, the CEO of Chewy, is up there with Elon Musk, Apple's Tim Cook, some other well-known CEOs as among the highest paid. Does he deserve to be there considering what he's done at the company? And just got about 30 seconds.
Well, I think if you bought Chewy right after the IPO and you still hold it now, I'm sure you're very happy, regardless of how much he got paid. We spoke to some former employees who pointed out that the company was in excellent shape already when he took over.
Interesting. Kind of feel bummed out for the two founders, though, man. It's a great read, and I told you got to check out the cover because I think I'm going to go home and frame it because it's just adorable. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Businesses coming up next. Our thanks to Joel Weber and Anders Mellon. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, November 18th, with the Dow, the S&P, Nasdaq all lower. Russell 2000 is advancing. We have seen Nasdaq swinging between gains and losses. Right to the numbers, give you the story in a moment. S&P down 10 now, drop there of 0.3%. We've got Nasdaq lower by 3, down less than 0.1%. Nasdaq 100 index, though, holding on to a gain of less than 0.1%. The Dow slumping 84 points now, lower by 0.3%. Stocks are declining as fresh restrictions to curtail the spread of coronavirus overshadow signs that scientists are making fast progress toward a vaccine. The 10-year down 6/32, 10-year yield 0.87%. Gold down 0.3%, 18.73 the ounce. West Texas Intermediate crude up 1.1%, 41.89 a barrel. Now, what about the economic recovery amid the pandemic and the Federal Reserve? Michael Kushma is Chief Investment Officer for Fixed Income at Morgan Stanley Investment Management.
I think the Fed has been clear about its intentions to support, provide accommodation, more accommodation if necessary, to get us to a stronger economy down the road. And they obviously can't put money directly in people's pockets, but they can do every possible measure to ensure the cost of putting money in people's pockets through borrowing is at very low levels, whether it's the household, the corporate sector, or the U.S. government.
J.P. Morgan Chase CEO Jamie Dimon says U.S. lawmakers are failing the country in their inability to reach a compromise on fiscal stimulus. Speaking at a virtual New York Times conference, Dimon put it like this, quote, "We have this big debate. Is it 2.2 trillion, 1.5 trillion? You got to be kidding me. Just split the baby and move on. This is childish behavior on the part of our politicians." J.P. Morgan shares, they're up today by 0.3%. Southwest Airlines has sent another 403 workers warnings that they could be furloughed as the carrier struggles to shave $500 million from labor costs. Southwest shares, they're up 1.8%. UAL up 2.9%. American up by 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, you got to love when Jamie Dimon gets worked up.
Without a doubt, I could not agree with you more. And I think we'll have more on this story coming up for you later during the show.
There's a tease for you. All right, Charlie Pellet, thank you so much. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
All right, so this story definitely caught my attention. I was reading in pretty early this morning on my way into 731 Lexington here at Bloomberg headquarters. It's a top story in my view at this hour, since as we watch closely COVID-19's impact on our economy and its recovery, which has been so well described, I think, by Peter Atwater over at William Mary as the K-shaped recovery, which illustrates some Americans, they have been largely untouched by the pandemic. For others, the lower leg of the K, it has been catastrophic. And maybe there's some folks in between that as some of the relief efforts start to come undone and stop, they're going to be in a tough way. This story is among the most read on the Bloomberg. It is about the year-end fiscal cliffs that are approaching for millions of Americans. Let's get into it with Reed Pickert. She is U.S. economy reporter at Bloomberg, and she is joining us on the phone in New York City. Reed, this is an important story. I really do think everybody has to stop, listen, because if we're worried about kind of where we are because of COVID, if we're worried about what's going to happen in the economy, especially with the lack of stimulus, you really lay it out what's at risk. So first of all, give us the big picture.
Yeah, of course. And thank you so much for having me on to talk about this story.
Sure.
So I guess the big picture of this is that there is a wide range of programs that are scheduled to expire at the end of the year. And they range everything from to federal unemployment insurance plan programs, to a national eviction moratorium, to a freeze on student loans. And, you know, as you were talking about this K-shaped recovery, the people that are really going to feel the brunt of the pain from these expirations are really those who are currently still out of work. And these programs, you know, they have a wide range of use. But I would say the biggest impact is definitely going to be from the expiration of those two unemployment insurance programs.
12 million people, you say, right, Reed? Roughly 12 million?
Yes. So the Century Foundation put out a report this morning where they estimated it would be about 12 million people that would be cut off from their unemployment insurance on December 26th. And for these people, this has been an extraordinary lifeline during the pandemic. And it's two parts. There's the folks that, you know, prior to now
wouldn't typically be eligible for jobless benefits, and those are the people who are on a program called Pandemic Unemployment Assistance, PUA. So that's your gig workers, your self-employed workers, and they have gotten these programs, a check each week that has helped support them during this time where, a lot of people aren't taking Ubers, and a lot of these jobs don't have the same kind of demand that they normally would. And then the other program is very similar to what we've seen in past recessions. It's called PEUC for short, but essentially it's an extension of jobless benefits for those who have exhausted their regular state benefits. So we saw this in the 2007 to 2009 recession as well. But whether people have used up the full number of weeks that they have or not, unless Congress acts, it's set to expire at the end of December as well.
Reed, and I want to go into some of the other, specific programs that you say, will come to an end and that really put a lot of Americans at risk. But the one thing I like about your story is, you go through these, you lay out the numbers, you lay out the research, but you also talk to Americans and what it means. Like, tell me about Larry Long of Willow Grove, Pennsylvania.
Yeah, of course. And I'd like to say that there were more people that, for space purposes, we couldn't fit them into the story. But Larry was someone that really stuck out to me. I chatted with him, and he's he's receiving the PUA, that unemployment assistance for those who aren't typically eligible. But he is a 63-year-old Black man in a town that's a little bit outside of Philadelphia. And before the pandemic, he made his income by basically helping to plan charity events and corporate parties. And as you can imagine, as soon as the pandemic hit, he said that for a couple weeks he was just receiving cancellation email after cancellation email. And so since then, he has been getting these pandemic unemployment assistance payments. And for the summer, it worked out okay because the CARES Act, which was the main fiscal relief bill that was passed back in March, provided this extra $600 a week in unemployment assistance. And when he had that extra $600, he was able to make it work. But as soon as those $600 payments ended and expired at the end of July, the bills have just been piling up. So when I was talking to him about what day-to-day looks like him for right now, he, said that with the amount that he's getting, he's really just trying to put food on the table. And he's has negotiated with his landlord to try to make a rent agreement payment, but he's really nervous about the culmination of running out of PUA, but also of the national eviction moratorium expiring at the end of the year as well.
Right. You said he's worried about losing his home, and he's also worried he's, as you write in your story, he's an older Black man with a touch of diabetes, so he's scared to death just about survival. Hey, just quickly, just got about 30, 40 seconds here on the tenant evictions. What do we need to know about that?
Yeah, so on the evictions front, this is basically has been a national policy to keep people in their homes and prevent landlords from evicting their tenants when they couldn't fully pay. And that has been a saving grace for a lot of people. But the problem now, of course, is that eviction moratorium is set to expire at the end of the year. So people are heading into January, perhaps with several months behind them of not having fully paid their rent or not have paid their rent at all, and could very much face eviction, because the fact is that the landlords have their bills to pay as well.
Yeah,
so,
we've talked about that with a lot of folks in the real estate industry. The problem is, I think about December 31st, right? People are often like, oh, a new year, thinking about what's to come, promising. And then for many, that's a deadline that could be really, really tough. I'm going to put your story out on Twitter because you go into all the programs and all the specifics. So thank you so much, Reed. Really appreciate you bringing it to us. Reed Pickert, she's U.S. economy reporter at Bloomberg News on the phone from New York. Let's get back to world and national news. For that, back to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol, Pfizer is out with more results in its ongoing coronavirus vaccine study that suggests The shots are 95% effective. The company says the vaccine appears to protect older people who are most at risk at dying with COVID-19. The surprise announcement, just a week after it first revealed promising preliminary results, comes as the company is preparing within days to formally ask U.S. regulators to allow emergency use of the vaccine. Dr. William Schaffner with Vanderbilt University School of Medicine tells Bloomberg the real challenge now is to convince the public it's safe.
Can we communicate effectively to the general population when it is that they should show up for vaccination and have them respond? There are a lot of skeptical people out there, so the effectiveness and the safety of the vaccine will have to be clearly communicated.
While the country waits for a vaccine, the FDA has given a green light to the first COVID-19 testing kit to be used in the home. Lucira Health's all-in-one test kit is expected to cost around $50. You will need a prescription to buy it. Results are provided in 30 minutes or less. The FAA is giving Boeing's troubled 737 MAX the go-ahead for takeoff, with FAA Administrator Steve Dickson issuing an ungrounding order today after a 20-month investigation into flaws with the plane's design.
It's taken a long time and a lot of effort, but we finally reached that point.
The plane was grounded when a safety feature meant to stop the plane from climbing too fast and stalling had improperly forced the nose of the plane down, causing 2 fatal crashes. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser right here in our Bloomberg Interactive Brokers studio. Charlie Pellet joining me as well. And you tease this. We want to talk a little bit more about what is one of the most read stories on the Bloomberg today. Jamie Dimon of J.P. Morgan Chase, we all know who he is, saying U.S. lawmakers are failing the country in their inability to reach a compromise on fiscal stimulus. But he said it in a more colorful way.
Well, he did, and I'll repeat the quote. He said, quote, "Just split the baby and move on. This is childish behavior on the part of our politicians," referring to the size of the package being debated in Washington.
Yeah, exactly. And we've seen, Charlie, these talks over additional stimulus being stalled for months because of the both sides, meaning the Democrats and the Republicans, coming together about the size and makeup of a package. He also went on to say, and what Jamie Dimon had to say plays right into what we just talked about with Reed Pickert, our U.S. economy reporter at Bloomberg News. She's got this incredible story out on the Bloomberg. I'll put it out on Twitter about year-end fiscal cliffs that are approaching for millions of Americans who are all of a sudden seeing all of these relief programs coming quickly to an end. And one individual she was just talking about, you know, he's been just struggling to put food on the table for his family and is really worried about what it means when the rest of these relief programs come out. Jamie Dimon specifically saying, to this point, there's a big part of our country which is really struggling. That's what we should be focusing on. It has zero to do with Democrats and Republicans. It's got to do with helping those people get through the toughest part of COVID, and we're not through with it yet.
Indeed. As I read the story, I heard really cries of frustration with the process, because you got Dimon saying that he sees valid arguments on both sides, but he says a compromise should be attainable, and he says a lack of stimulus reduces the nation's prospects for having a good economic outcome. Further down, Carol, another nugget in our story. Dimon says he has never coveted the job of Treasury Secretary and will help whoever fills that position.
Yeah, so putting that aside, so we'll see what Jamie does maybe after J.P. Morgan. I do want to say he says also we need to get through the problem. Who's going to sit down and say, well, these won't survive and these will? We just don't have time to do that. So some really, I think, smart words, no doubt about it, and harsh words from Jamie Dimon. Thanks, Charlie. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are now trading mixed. We've got Nasdaq back on the plus side. It has been a choppy session. The Dow, the S&P, they are both lower. 43 minutes to go ahead of the closing bell. Let's head right over to the First Word breaking news desk. Lots going on. Here he is with today's afternoon call, Bill Maloney.
Mixed right now, well off their session highs. Dow's currently down 77 points. S&P's drop 8. Nasdaq gains 12. The U.S. 10-year yield at 0.87%. Gold trading lower by 7. Transports rise 19 points. And among the main 11 S&P sectors, industrials and materials led. Energy and utilities were under pressure. Leaders to the upside in the Dow, and Caterpillar and Salesforce. Chevron and Boeing led to the downside. And regarding earnings, Target beat estimates, traded to a record high. And in other news, Google to offer checking accounts with banks, and the New York City to shut schools after the virus infections reached a critical threshold. Wrapping things up, NVIDIA reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. We'll be all over NVIDIA as it breaks, and to hear live breaking news over your Bloomberg Type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Massar in our Bloomberg Interactive Brokers studio. All right, everyone, we're having some technical problems, so our apologies for that. We were just briefly stepping into a press conference underway by New York City Mayor Bill de Blasio, giving an update on the virus in his city. Of course, the big headlines that we did get just moments ago, really at the start of our broadcast, was about New York City planning to close its public schools again as virus cases rise. Again, it's a big setback for the city's recovery. The school's chancellor, who said the nation's largest district would return to all remote learning. So again, their entire public school system will shutter. That will happen starting tomorrow, and putting that out, the school's chancellor, in an email to principals. All right, you are listening to Bloomberg Business Week, and I'm Carol Massar in our Bloomberg Interactive Brokers studio. It is time for Bloomberg Green. It is brought to you by PGIM, the investment management business of Prudential. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. That's PGIM.com. All right, so we mentioned that the Bloomberg New Economy Forum has been happening. It was day 3 today, focused on climate, lots of smart conversations, no doubt about it. And with that in mind, we've got a climate ESG related question for you all. What do these 5 companies have in common? I'm talking about Intel, Walt Disney, General Mills, Amex, and Amgen. Well, here with an answer is Bloomberg News executive editor Tim Quenson. He joins us on the phone in New York City. Tim, thanks for your patience here. So talk to us a little bit about what those companies have in common.
Yeah, so Goldman Sachs put out a report. They called it the 2021 U.S. Equity Outlook, Roaring Twenties Redux. And in it, they had an 8-page segment about ESG. And they used it to look at the S&P 500 and try to find, which companies scored the highest. They really looked at the environmental and social aspects of the companies, and they came up with a list of 50 companies.
Okay, and so they basically are picking those that are doing well. And I think ESG, as you know better than most, I feel like for a long time it was just it sounded like a nice thing to do, but it's gotten really serious. And we look at a list like this, especially as we know that customers, they care more about this when it comes to the companies that they work with.
Exactly. I mean, it's been amazing what's happened this year in socially responsible investing and ESG. I mean, there's been $28 billion of money that's been invested in ESG-focused funds this year. That's more than the 5 previous years combined. And that demand is only certainly going to increase with the election of Joe Biden, who's obviously much more environmentally friendly than Donald Trump has been. So, I mean, Goldman's premise is that that the demand is going to keep going, and statistically, they show that the companies with the highest E&S scores, environmental and social scores, have generated stronger returns than those with the lower scores.
So they're actually performing better in terms of financial numbers, financial metrics.
That's what Goldman reports. There has been some debate on this, but they point out
No. Please continue.
They point to the MSCI ACY index, and they say that companies that score in the top quintile on ESG produce an annualized return of 11%. Compared with 8% for those companies in the bottom quartile, and those companies include the ones that you mentioned at the beginning, Carol.
Yeah, and what's interesting, I don't know if you caught Alan Jope of Unilever up at the Bloomberg New Economy Forum. It was happening this morning, and I know it'll continue. But Alan Jope said something about Gen Zennials, which is a term I've heard of Gen X, I've heard of Gen Y, I've heard of Millennials, but he said Gen Zennials. He said they are the consumers of the future, and if you want to be relevant in the future, you have to think about them. And he's just kind of basically saying to companies out there, that's who you need to be thinking about, because they care about things in terms of how a company impacts their, the carbon footprint, how they impact the environment, whether they really are sustainable. The one thing I want to ask you, why I've got you here, Tim, is that the definition of ESG, and this is in your story, it's kind of, I feel like when people say this is a natural food, it means kind of nothing. Organic, there are rules to it. So we kind of need to have the rules kind of be really clear, and I know we're working on that.
I mean, I think organizations, including Bloomberg, is trying to work on a statistical way that you could, measure the various aspects. I mean, in the Goldman report, they say that the definition of ESG, is it broad and ambiguous and makes it difficult to assign a single rating to a company or to compare sustainability across industries and sectors. And also, the availability of ESG data in quality is uneven. But I mean, there's certainly a lot of firms that are taking this very seriously, including Bloomberg, to try to get their hands around presenting data where investors can say, all right, this number is pure. We know that this company is doing well on ESG.
Right, whether it's equality, whether it's diversity. I mean, if you have clear, concise kind of metrics and ways to measure it, then you can kind of compare companies, and especially for investors where this matters, right? It's not just greenwashing and just saying we're doing good. You can actually show the numbers and be really transparent about it. Hey, Tim, thank you so much. I think it's a really important story. And thanks again, too, for your patience as we were kind of weaving in and out of some of the news of the day. Tim Quinson, his executive editor at Bloomberg News, joining us on the phone from New York City about Goldman picking its winners when it comes to the ESG sweepstakes. You're listening to Bloomberg Business Week. On the other side, we're going to get to Dave Wilson and his chart of the day. That's coming up on Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I'm Carol Masser in our Bloomberg Interactive Broker studio. I don't know about you, but I could kind of use a little bit of a music and a chart of the day just to cheer me up a little bit. So we're going to get to that in just a moment with Dave Wilson. So just stick around for that. First up, though, got to get back to Charlie Pellet and look at the trading day.
Here's what's going on. Busy day, lots going on with the Dow, the S&P, Nasdaq, all moving lower right now. Nasdaq has been swinging between gains and losses. 12-point drop right now, down about 0.1%. The S&P lower by 19. That is a drop of 0.5%. The Dow tumbling 181 points right now, a drop of 0.6%. As I look at the S&P chart, GIP screen on your Bloomberg, lower now by, in fact, the low of the day, down by 0.5%. Stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadows signs that scientists are making fast progress toward a vaccine. 10-year yield 0.87%, gold down 0.5%, 1871 the ounce, and West Texas Intermediate crude up 0.9%, 41.80 a barrel. Dow member Boeing climbing after U.S. regulators ruled that the 737 MAX can safely return to the skies with an extensive package of fixes. Boeing shares trading lower now by 2.3%. Apple cutting by half the fees charged to most developers who sell software and services on the App Store. Apple down now by 0.1%. And Alphabet, parent of Google, has unveiled its long-anticipated expansion of Google Pay, partnering with banks and retailers to offer consumers new forms of bank accounts, cards, and discounts. Alphabet shares down 0.8%. 3:33 on Wall Street. Time now for the Small Business Report with John Tucker.
Katrina Brooks runs Black Pearl Books. This black-owned bookseller has had some unique challenges during the pandemic, also seen business boom. Katrina, yours is an online bookstore, but there was still a big impact from the pandemic. Is that right?
It's an online bookstore. However, at the time, I wouldn't have considered us an online bookstore. It was really more about doing pop-ups and being in a community. The pandemic hit. All of the plans that we had, all of the events that we had scheduled out through March, April, May were obviously canceled.
Now, with the killing of George Floyd, how did business change?
This huge awakening of society took place. Our online traffic increased by like 200%. You know, this overnight thing where all of a sudden we started getting order after order after order. It really was people seeking knowledge, people being impacted by what they had seen and seeking knowledge about, you know, racism, anti-racism, social injustice. I've seen a different side of people. I've seen kindness. I've seen the coming together of people. I've seen the support, you know, not only for Black businesses, but for small businesses, for women-owned businesses. We've had people reach out and say, hey, I want to just come volunteer. I just want to help in any way that I can. I know that you were inundated with orders. You're a small business with limited resources. I just want to help, you know. And so we've seen the good side of it.
Katrina Brooks of Black Pearl Books in Austin, Texas. Thanks very much. And that is today's Bloomberg Small Business Report.
And John Tucker, we thank you again. Recapping stocks lower, S&P down 16, down 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg. Oh, my God. I don't even need much for that. I know that guitar riff. That's Heart, who I've actually seen in concert recently. Dave. Is Dave there?
Yes.
Listen, every time I hear Heart, I go back to the Led Zeppelin honorees at the Kennedy Center honors that they do at the end of the year. And you remember when Led Zeppelin was honored? It was a few years ago. And Heart did Stairway to Heaven. And it will blow your mind if you haven't seen it. It is unbelievable. And John Bonner's son, he actually played the drums there. And it was just unbelievable.
Yeah, Jason Bonham.
Yeah, Jason Bonham. Yeah.
who I have seen in concert, but that's another story for another day. Never got around to seeing Heart, though.
They were fun. It was a couple years ago. My husband saw like a revival, and he's like, it was a small place out in New Jersey. I want to say it was in maybe Englewood. That they have a kind of a cool little theater there.
Yeah, Bergen Pack, if I'm not mistaken, is in Englewood.
And it was great. It was really fun. Anyway, so great song related to your chart and what we need to know.
Well, it's all about sort of evening up between larger and smaller companies. And it's inspired by the latest blog post from Liz Ann Saunders, who's the chief investment strategist at Charles Schwab. She came out with it yesterday and noted that she was ending a recommendation that investors favor larger companies, think the S&P 500, over smaller ones, think the Russell 2000 index. So in other words, overweight the large caps, underweight the small caps. Basically, that was the call. And she just took it off. I mean, basically saying that there isn't really that much difference between the two at this point, at least not enough to justify favoring the larger companies. And so what I did is looked at the ratio between the S&P 500 and the Russell 2000. And this is a call she made back in March 2017 initially, so the chart goes back to the start of that year. And what you see is that this year the ratio has been, shall we say, volatile. You know, back in February and March when we were in the middle of the bear market, short-lived bear market, you saw the ratio jump as much as 22%. So if investors wanted to own any stocks, they wanted to own the shares of the larger companies, the S&P 500 companies. And since then, we have seen that entire gain practically been given back. So
that's huge.
The timing was interesting in the context of the volatility that we've seen in this particular ratio, which is really highlighted in the chart what the last few months are. And if you want to know more, folks, send me an email. I'll get it to you, the chart and the explanation that goes with it and everything I do going forward. Send me an email at dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Ann and Nancy Wilson. They're like incredible. I can't believe you've never seen them live. Do you have a favorite song?
Well, Barracuda is one that comes to mind.
Yeah.
Absolutely. And
So,
you know, you talk about, I think it was a VH1 Honors. I remember Gretchen Wilson doing a version of Barracuda with Alice in Chains and Nancy Wilson playing guitar.
I bet it was really cool.
Oh, it was something. You should look that one up on YouTube sometime when you get a chance.
All right. I just tweeted out the Kennedy Center honors when Hart did Stairway to Heaven honoring Led Zeppelin. So I'll look up that one, Dave, as well. I'm going to go down a rabbit hole. You can see it coming, right?
Absolutely.
All right. Dave Wilson, thank you so much. Always appreciate it. Check out the One Dave on Twitter for Dave's chart of the day. Really good one. And what we've been talking about a lot, that small cap, large cap kind of back and forth that we've been seeing. So interesting to see Schwab's call on that. All right. You are listening to Bloomberg Business Week. We've got about 20 seconds left. 20 seconds. Scared you there for a minute. 20 minutes left in today's trading session. So we're going to count you down to the closing bell and get to that shortly. In the meantime, we do want to do another check on world and national news. A lot going on. Over to Nancy Lyons we go once again in D.C. Hey, Nance.
Hey, Carol. Well, drug maker Pfizer says after attaining 95% effectiveness for its COVID-19 vaccine, it will now apply for regulators' approval within days. Bloomberg's Irv Chapman has more from Washington.
Daily average of U.S. cases has topped 150,000 and could increase further depending on how Americans handle Thanksgiving and Christmas celebrations. Dr. Stephen Corwin, chief executive of New York Presbyterian Hospital, said in a Bloomberg interview.
Now you're seeing this across the entire country. When New York went through this crisis, we received staffing help from around the country. That's not going to be available for many of the health systems now because we're seeing it across the entire country.
Dr. Corwin said the goal line is in sight for next spring, thanks to the rapid development of vaccines, which he called a remarkable scientific achievement. In Washington, Irv Chapman, Bloomberg Radio.
Well, for the city of New York, the vaccine can't come soon enough. Today, the city's school system, the nation's largest, announced it will close all in-person learning due to the rising coronavirus infections. President-elect Joe Biden has been holding a roundtable with healthcare workers this afternoon, telling them that the Trump administration's refusal to start the transition process will be costly.
There's a whole lot of things that are we just don't have available to us, which unless it's made available soon, we're going to be behind by weeks or months.
Biden says he does know the nation's stockpiles of personal protective equipment have been seriously depleted. The Minnesota Timberwolves own the #1 pick in tonight's NBA draft. Because of the pandemic, this year's draft will take place entirely online. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Masser in our Bloomberg Interactive Broker studio. Charlie Pellet also with me. This story by Sri Natarajan. Love his reporting. And it kicks off, Charlie, saying the days of job security on Wall Street, well, they were short-lived.
Yeah, indeed. Goldman Sachs' second round of several hundred firings in the course of 3 months. Just another sign that the pandemic pause on layoffs just kicked the cost-cutting can down the road. Goldman, Carol, not alone.
No, exactly. And, remember kind of as we got into the virus and got into COVID back in spring, a lot of companies were out there saying, don't worry about it. Your jobs are safe. And so they even did some hiring of new college graduates. It brought the sharpest surge in the head count on Wall Street of the 6 biggest U.S. banks since the financial crisis spurred a series of mergers. The firm's adding, check this out, Charlie, almost 32,000 workers in the first 9 months of the year, led by 15,000 at Bank of America, which is sticking by its no layoffs promise for 2020. But as this pandemic drags on, we've got banks increasingly stepping up and saying, we got to cut costs, we've got to let workers go.
Indeed, though. But, Carol, it comes also, too, as mortgage rates continue to tumble, and you've got banks adding mortgage workers. Just want to point out, too, that as the pandemic drags on, a couple of the big companies, for instance, at Goldman, you've got a new CEO there, David Solomon on board, also Wells Fargo, Charlie Scharf. Job #1 for them, cutting costs.
But I'm just going to point out that, I think there's been some concerns, but we've seen fairly decent numbers on Wall Street. And I do wonder about, we've had a lot of companies, the big banks, pledge multiple stakeholders when they think about running their firm. And I do think about the stakeholders that are the employees and what this means and whether or not they're paying too much attention to what's going on in share prices, because we are seeing pressure. The 4 biggest banks have all fallen more than 14% in a year when the S&P 500 is up 12%. So I wonder if big banks are paying more attention to shareholders versus kind of all of their stakeholders, including their employees.
Indeed. Well-intentioned promise, though, laid by the wayside.
Yeah, well, this year has been a tough one, and certainly some promises it's sometimes hard to keep. Certainly seeing that play out. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell on this Wednesday. The Dow, the S&P, Nasdaq, all in retreat. Nasdaq 100 index just turning negative. Russell 2000 also on the minus side. Stocks are slumping as fresh restrictions to curtail the spread of coronavirus overshadow signs that scientists are making fast progress toward a vaccine. On a down day for the rest of the market, we've got shares of Pfizer and BioNTech also moving higher right now. 4% jump there for BioNTech. As for Pfizer, it is up by 1%. The S&P did fall to session lows after New York City shut schools because of rising infections. S&P down 25, a drop now of 0.7%. The Dow down 214 points, down 0.7%. Nasdaq down 51 points, a drop there of 0.4%. Little bounce off the bottom on the S&P, but again down by 0.7%. 10-year down 4/32, 10-year yield 0.87%. Gold lower by 0.6%, $18.69 the ounce. Crude up just about 0.7%, $41.70 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
It is time for the drive to the close. Back with us is Craig Hodges, CEO and portfolio manager of the Hodges Funds, $1.5 billion in assets under management based in Dallas. And joining us on the phone from there on a day, Wednesday, where we've got stocks pretty much hovering at their lows of the session. So we're down about, as Charlie mentioned, down about 0.9% on the Dow Jones Industrial Average, down 279 points. S&P 500 also down almost 0.9% at 3578. And the Nasdaq just down about 0.5%, down 65 points. So Craig Hodges, nice to have you here. How are you doing? I know there's been some rough COVID numbers out in Dallas. I've got a bunch of family out in Texas. How are you doing?
Yeah, doing well. We've been pretty fortunate not to get hit too hard, and I think it's fairly under control here. But the numbers you see do scare you, so you have to continue to take heed, if you will.
Yeah, exactly. Well, what does it mean for investors? Do they have to take heed as well?
I think that they do. We've had an interesting situation. We manage money and we handle a lot of individual accounts, probably over 600. And I think throughout the industry, what you saw around the election time, starting at about September, is people raised a pretty good cash position in their accounts, not to predict what would happen, but just because of the volatility and the uncertainty of it. Well, there wasn't hardly any volatility, and the market has continued to move up. So I believe what's happened since the election, even though it's hasn't been finalized, although everyone knows what will happen, is that people are putting that money back to work. So I think that's what's driven the market here in the last month or so. That being said, I think it's probably a little ahead of itself. I did a conference call with a bunch of great money managers last night, and the optimism was flowing. And anytime you see that,
makes me want to run for the exit.
Exactly. So I don't look for anything terrible, but I think the market could be a little ahead of itself.
Why are money managers so enthusiastic? What were they saying on that call?
Well, there's been so much disruption in the marketplace, and there's been stocks that have done fantastic this last year and a half, and there's been stocks that have done horribly, and you're starting to see the ones
that makes a market, right?
Yeah, and the ones that have lagged, that still have good business opportunities, are really starting to perform. So I think, and that's what a lot of these people, and not everyone is in the FANG and the top 6 stocks that have driven everything. There's another market out there that's kind of been the have-nots, if you will. And so, and that's what we're doing here at Hodges Funds and Hodges Capital. Is there's just a bevy of stocks that have not participated that you're starting to see all of a sudden get some breath and start to move.
How frustrated, though, are you guys to be in the small cap space? And I know they're starting to have their day a little bit, but I'm looking at your Hodges Small Cap Fund. You're up about 3.5%. It's been a struggle.
It has been a struggle for, going on 3 years. And although I will say this, I noticed that the small cap performance, the Russell 2000, 81% of the stocks in the Russell 2000 are above their 200-day moving average on the chart, and being very technically, a positive. That's the most since 2013. So it really looks like things are starting to turn. And these things go in cycles, and it's very understandable why the large cap, stocks have moved so well. It's been basically the ETF craze that's driven a lot of that. But there will be a time and place for small caps, and we really and they've had really nice outperformance for, I'd say, about the past 2 months or so.
All right, interesting. So talk to us about some of the names, because my understanding is among the major themes that you are interested in is kind of deurbanization and businesses related to that. What specifically are you talking about? Are you talking about the exodus from cities?
Yeah, you're seeing because
you believe that's really going to stick?
Oh my gosh! Well, you saw this in the 70s happen, and it lasted for anywhere from 5 to 8 years, depending on the data.
But it was miserable in the cities. There was crises and so on and so forth. I mean,
well, it's not just the unrest and the COVID that's driving people out. It's the fact that all of a sudden, you don't have to have an hour and a half commute to get to work. You can work from home, or you can live 2 states away and live wherever you want and still work at whatever firm. I've seen where 30% of the companies out there are saying they'll never bring these people back into the office. They'll let them work remotely. So that's going to drive people to the suburbs. And you add on the fact that you have historically low interest rates. The millennials, which is the biggest demographic in the history of the world, they're now at that age. They're now at that age where they're moving out, they're getting married, they're buying homes, and it's also economic in that it's much better financially to own than to rent, especially with these low rates. And then we've got this shortage of housing. So it's not just the housing stocks that we like, it's everything related to those. You're talking about retailers like Home Depot and Lowe's and companies that do lawn and gardening and remodeling and things like that. Even like the home gym business is a phenomenal thing that's happened. Pets and pet supplies and all these things. The mattress business is really booming right now, and so there's many ways to play this thing. And like I said, I think this will last for years and not just be a flash in the pan, if you will.
All right. So if you had to commit new money, one of the new names or one of the names you like is Taylor Morrison. You would be committing to money there?
Yes, we would. They're in great markets. It's one of the least expensive, trading right around book value. And you've seen most of these home builders have made tremendous moves, and it's made a good move.
I mean, it's up 15% so far this year. We've seen, you're right, the home builders have really been on a rise, low mortgage rates, and as you said, some of the trends of people moving out, and also the supply has been down.
Yeah, and historically these things are feast or famine. But like I said, I think there's, because of the shortage and because of we have about a 3-month supply of housing, I think this is a trend that's going to last for a considerable time. So and they're still very inexpensive. These stocks are some of the most inexpensive of the entire market.
Yeah, Taylor Morrison's got a forward-looking PE of about not quite 11, just under it, and a current PE of about 6.6. Interesting. Just quickly, 30 seconds. Rocket Mortgage, same story.
Yeah, we believe Rocket will be the dominant, brand in mortgage and refinancing, and they have unbelievable scale opportunities in that company. And they're not just a refinance firm; they're actually, because of young people being more comfortable with doing everything on their phones, there's more and more people going this route. They think their market share will go from 10, where it is now, to 25% by 2030, and that will be a juggernaut of a company.
$42 billion market cap company. That's pretty remarkable. Going to leave it there. Really appreciate it. Craig Hodges, CEO, Portfolio Manager of the Hodges Funds, on the phone from Dallas. Stick around. We've got the closing bell in just about 3.5 minutes' time. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There it is, sound of the closing bell at the New York Stock Exchange. Final hour fade. The Dow, the S&P, and Nasdaq closing decidedly at the worst level of the day. First, we begin with a headline from the Bloomberg Professional Service. Fannie Mae and Freddie Mac will be required by their regulator to hold hundreds of billions of dollars in capital to protect against losses, a step considered crucial to freeing the mortgage giants from U.S. control. The Federal Housing Finance Agency rule finalized today stipulates how much of a capital cushion the companies will have to retain against their assets as fully private entities in order to weather a financial crisis. The Dow, the S&P, and Nasdaq slumped as fresh restrictions to curtail the spread of coronavirus overshadowed signs that scientists are making fast progress toward a vaccine. Dollar neared its lowest level in 2 years. S&P down 41, a drop of 1.2%. The Dow down 345, down 1.2%. Nasdaq down 97, a drop of 0.8%. 10-year down 5/30 seconds, 10-year yield 0.87%. Russell 2000 tumbled along with the rest of the market today, down by 1.3%. Craig Hodges is the CEO and portfolio manager at Hodges Funds, where he focuses on shares of small cap companies. He was our guest moments ago right here on Bloomberg Business Week.
The small cap performance, the Russell 2000, 81% of the stocks in the Russell 2000 are above their 200-day moving average on the chart, being very technically, a positive. That's right. The most since 2013. So it really looks like things are starting to turn.
A surge today for Tesla. Morgan Stanley gave Tesla an overweight rating for the first time in more than 3 years. Tesla rallying today by just about 10.2%. After earnings, Target up 2.2%, Lowe's down 8.2%. Down day on Wall Street. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stiffy, you got some moves.
On Bloomberg Radio.
Yeah, time to do some shaking here on Bloomberg Business Week. I'm Carol Massar, along with Bloomberg News cross-asset reporter Sarah Ponzak. And we're going to talk a little bit about the markets. Don't forget, we've got NVIDIA coming out after the close. We'll bring you those numbers as soon as they cross. Big picture, let's start there. It was predominantly a risk-off trade. 104 names, though, in the S&P 500, still managing to eke out some gains. We had 398 lower, 4 unchanged. Taking a look at the major industry groups in the S&P 500, there are 11. They were all down. Best performer, industrials, but still down about 0.5%. Consumer discretionary, second best performer, still down about 0.8%. Bottom of the pack, energy, man. They just cannot get a break. It was down about 2.9% as a whole. All right, Sarah Ponzak, where shall we begin?
So we've had some sobering headlines coming out. And first, we need to set the stage.
You're talking about the virus.
Yes, about COVID-19. One, New York City, living here. Schools are now shutting down. You have to wonder, all right, well, then what comes next? We have reminiscence memories of back to March when this kind of all began.
Can I just say, I see it as partly a not a positive, but it's officials understanding how bad this can get and trying to stop it before it gets to that level where hospitals and healthcare systems are maxed out. Yes. And we're back to where we were in March, April. I'm not saying, it's just kind of my take on it. Like, we've learned something.
We've
but
learned
still,
plenty.
It's not
Absolutely.
Good.
And there's also now this idea that we know the vaccine is coming one day.
Right.
And we've had great statistics on efficacy from Pfizer, also from Moderna. So that's also something to look forward to, which is much of the reason that investors have been able to remain so optimistic. But how optimistic can you remain for how long? Consider the fact that the Russell 2000, yes, it did close lower today along with the other major benchmarks.
Right.
On track for its best month since 2000. So by no means has November been a rocky month of, if anything, even with the election, even with rising restrictions, COVID-19
Pretty remarkable,
cases,
right?
It is very remarkable. The best market has been remarkable all year long, let's face it. But the fact of the matter is, we see these headlines on New York City. We also have Delta saying today, executives there saying that, yes, we have a vaccine, but that's not likely to boost travel in the near term. And I think that kind of spreads itself to other industries too, that yes, while we have something to look forward to, Who knows how long from now? A couple months, maybe a couple of quarters. We're not sure. But until then, it's going to be difficult.
Right. Like we've gotten more information. We're moving closer to a vaccine, but then there's distribution, logistics. It's still a long way between, they're going to give it to the frontline workers and the most vulnerable, which they should. But as we've all been talking, we just don't quite know when it reaches the masses. The other thing I think about Delta and anybody in the hospitality industry, the all-important business traveler, right? That is so lucrative to their bottom line. That's not going to come back for a while.
Right. Delta, they said that international travel, too, they don't really see coming back likely until 2022. That is...
The Caribbean wants us, though. Do you know that? There was a great story in the Bloomberg that the Caribbean is trying to bring everybody in to come work from home in the Caribbean. They don't really have virus cases because they've shut down their border. I'm just putting it out there.
I didn't see that, but it sounds like a great idea. Let's do it, Carol.
It's totally a good idea. But you make a good point. So where does that leave us then in terms of market movement, market direction at this point?
It leaves us almost in this nowhere land. But AAII data, the latest Bank of America Fund Manager survey, positioning has started to look very optimistic. And it makes you wonder that if all of a sudden, if we start getting this wave of negative headlines and people start feeling it in a personal way too, if your personal lives start being affected even more than they already have this year, it makes you wonder if there's already this built-in optimism, how much can this market truly take? And that's why we've discussed it before. Some strategists are now starting to turn tactically bearish. They say, I don't understand how we can continue at this pace.
It's like you were listening to my conversation at 3:45. It was our market guest, Chris Hodges, and he said, listen, I had a call with money managers, really smart group, but they were so optimistic. And he said, that makes me nervous.
Right. When everyone is at one end of the table,
yep.
The contrarian side of that is, I'm not so sure. But at the same time, you can make that case throughout the year. There have been plenty of times throughout 2020 that I have heard the case made that people are so optimistic. So then how optimistic can you truly be? And here we are, how many months later, with a market that has just run up. And if you have been bearish or sat out, clearly you've had a hard time.
The thing that breaks my heart, though, is if you're in the market, in the financial market, you've got a 401k, you're at this point feeling okay. But for a lot of Americans who are not, we talk about Main Street, they are getting hurt really hard. Reed Pickard has a great story, troubling story about kind of the fiscal cliff for so many Americans. Quickly, retailers, Target up 2.3% today.
Right. So Target on one end reported earnings absolutely blew it out of the water. And you also have to keep in mind that Target, too, is up about 30% this year. So Target has performed well all year long. It's kind of been one of these
What's not to love about Target?
Right. What's not? Especially when you pronounce it like that.
Lowe's, though, the other direction.
Right. So Lowe's was actually the worst performing stock in the S&P 500, down 8%. Lowe's has also been one of these COVID-19 beneficiaries, but they've had expenses piling up.
Yep.
This is not a Lowe's alone story. We have seen this kind of across the board with some of these companies that while they've seen demand explode, they've seen expenses increase as well during COVID.
All right. Good stuff as always. Sarah Ponzek, thank you so much. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave!
Who?
Dave!
Hey, Mr. Wilson!
All right, Dave Wilson, come on in on your stock of the day. Ticker is TEX.
Terex, it's a maker of cranes, work platforms, other industrial equipment. The company's been listed on the New York Stock Exchange since 1991, and yes, the ticker is TEX. It's been around since 1933. Now, as far as the shares go, they set a record in 2007, plunged as stocks entered a bear market that year, and have swung at lower levels ever since. Terex fell in May to its lowest price since October 2011, and since then, it's more than doubled. The rally was aided today by Citigroup, where analyst Timothy Thine recommended buying the stock for the first time since he began coverage in 2014. Thine raised his rating on Terex to buy from neutral based on a more favorable sales outlook for next year. He wrote in a note that he's looking for 20% growth, judging by contacts with suppliers and equipment makers. Terex rose as much as 8.2% to reach its highest price since July of last year. Now the shares pulled back as the day went on. They did close, though, with a gain of 4%.
I'm so sorry I made you rush. We'll give you more time tomorrow. Okay.